But to someone that's clued on, or someone that's watching this podcast, is going to know that that could be an actual opportunity to kind of get a property that's going to be worth it for you, and it's going to be a good investment opportunity because you can make some money on it.
Simple as that.
Why would someone use a broker versus doing it themselves?
I think it depends on the kind of deal you're doing. So if it's mainstream or quite vanilla, you could go to your own bank. You go to Lloyds Bank and they might sort it out for you. But what you find is that these high street lenders, Barclays, Lloyds, Halifax, they are risk averse because they're banks, right? They don't lend to limited companies, for example. So if you're an investor, you might start buying in a company rather than your personal name because of tax benefits. Those lenders don't like that. You'll be surprised how many lenders there are who are not on the high street, specialist lenders. Some of them are banks, but they're specialists, and they don't deal with clients direct. They want you to use a broker.
Bridging, whenever I used to speak about bridging loans or bridging finance to anyone around me, they'd be like, oh bro, stay away from them, it's scary.
Listen, it's scary. Okay, listen. Tell them people.
See, with the property game, when people say, you need to get into the property game, what do people mean by that? Like, what is the property game? The
property game is making money from property, renting it out or developing it and selling it.
Okay.
Yeah, making money from bricks and mortar assets.
Is there money to be made in the property game?
There's always money to be made in the property game, but property isn't get rich quick.
Okay. Because that's another sort of misconception that a lot of people have, that property is an easy route.
Mm-hmm.
It's a get rich quick scheme, especially in the rent to rent game. I've seen that. There's a lot of gurus online.
Yep.
And I've seen gurus that kind of contradict each other. So that's another confusing concept for people to kind of understand, especially when they're looking to kind of get into the property game. But what I want to know, and a lot of people are probably thinking this from the audience, is if I wanted to get into the property game, how much money do I need?
Yeah, no, it's a good question. And it all depends on where you want to invest. So what part of the country do you want to buy a property in?
Let's keep it simple, and we'll kind of go through this conversation today with like examples or scenarios, and I'll kind of give you that as a basis, and then you can kind of answer it from that perspective. So for example, if let's just say I'm in a 9 to 5, I've got a decent salary, 30 to 50k a year, which is, respectable.
Big range, but yeah.
Oh, is it? Okay, so let's just say, what's the average in the UK?
35, I think.
35. Let's just say we're on 35k a year. 9 to 5, full-time job, happy, yeah? No really major debts or anything, probably a credit card here and there.
Yeah.
How much do I... And my goal is to kind of to get into the property ladder as an investment or to build a portfolio.
So as a landlord / investor.
Yeah, so again, I know we spoke off camera, so there's a difference between a landlord and an investor, which is quite interesting. So we'll kind of you know what, let's just start off with that. Just to kind of make it easier.
Too much to cover, right.
Okay, so landlord and a property investor.
Yes.
What's the difference?
In my opinion, I think a landlord is someone who has properties or a property or a couple of properties. They rent them out. They make a bit of profit. They don't really care about the market, or they don't treat it as a business.
Okay.
I would say a property investor is someone who looks at markets and timings. So looks at when the market is low, is it an opportunity? They look at developing properties. They look at buying properties below market value. They might look at buying properties at auction, because that is quite risky.
Yeah.
So an investor invests where a landlord just buys and rents out, in my opinion.
Okay. I reckon you could probably be a combination of the two.
You could be,
because I think when people taste the property game, they kind of like it.
Yes, I mean, I suppose look, with if we're going to again say landlord, generally they're the kind of people who might buy 1 or 2 properties as an inheritance thing for their kids. Yeah. So they don't really care what happens between now and the next 25 years. But at the end of 25 years, when hopefully the value's gone up, they can give it to their kids. So it's a long-term thing. They don't really care about increasing the rents too much, trying different strategies, doing different things within the property.
Okay, yeah. Okay, so if I was to, let's just say, put a bit more time into sort of investing into property, and I really wanted to kind of take it serious and treat it like an actual business.
Like a business.
Yeah. Treat it like a business. How much is it doable, knowing that I've got a 9 to 5 job? Would it be something you'd recommend to someone?
I definitely would. So as an example, to give you kind of a case study, one of my biggest clients, he bought 15 properties in 9 months, right?
15 properties in 9 months.
In South Wales, it's dirt cheap in Wales.
Okay,
You could buy a whole bin. You know?
Damn.
But he did that, right? But he's in London. The
Okay.
property's in Wales. So then he says, like, people always ask me why so far. He's like, well, the cost of entry is a lot lower. If I had to buy in London, I wouldn't have the money.
Yeah.
Secondly, they're like, okay, well, what about maintenance, repairs, and things like that? He's like, well, look, in honesty, even if I lived next door, I still wouldn't fix any plumbing issues. I wouldn't fix anything. I'd call someone out. So you build the relationships to make it as hands off as possible. So yeah, of course you can do it alongside 9 to 5.
Yeah, that was another thing actually that when I was looking into sort of the property sort of game is, do you want to be a hands-on sort of investor or landlord or whatever you want to call it, or is it something that you're going to outsource? You know, I'm assuming if it's like maintenance and stuff, if it's something that you're going to outsource to like maybe an agency or whatever, all it is, you're just taking less home. Is that what it is?
Yeah, of course. Look, the more you outsource, the more or the less, sorry, you get net in your bank, but then the less stress and the less hands-on you are. So it's which
just thinking, because you know my dad's a bit old school in it, so he's like the mentality of, if I can do it or if I can learn how to do it, I'm going to do it myself. I don't want to spend a penny. Whereas I'm the opposite. If I can just pay someone to do it and save a bit of time, I'm like sort of that. So I reckon giving it to an agency, but is there any downfalls giving it to an agency?
I suppose, some of the risks are you have less control or knowledge of who's going to be in the property, but then any good agency will do referencing.
Okay.
So if someone passes referencing, they'll let them in. That's the main thing. Obviously, agencies charge fees and they charge a percentage fee, so you're losing money that way, but you're still going to make money on rental. Okay,
so let's bring it back. Again, just being mindful of the audience. They're gonna watch this and think, maybe I'm probably looking to kind of get into the property game. Is it something that's worth doing? Am I able and capable of doing it? So let's just kind of break it down. What are some of the strategies if someone wanted to kind of get into the property game?
Yeah, no, this is a massive question because there's a lot of ways to do it. I think there's definitely worth defining. You can get into property by buying property and renting it out.
Okay.
And then, like you touched on, there's also ways of making money from property that you don't own, like rent to rent and managing. So if you just do it step by step, if you buy a property, you generally need a 25% deposit. So let's just say, as an example, if it's worth £100,000, you've got to have 25 grand in the bank plus fees and whatever. And then you could rent it out as a single family unit. So you get one tenancy and they let it out. And then this is where kind of you look at as an investor, could that property be let to maybe say 4 or 5 students? They call that a HMO. So it's a house of multiple occupation. So when there's 3 or more unrelated people in the house, they have separate tenancy agreements and they all pay you rent per room. Now, that might sound like a headache, but you're getting 4 or 5 times the rent, right?
Yeah, you're definitely getting a lot more than if you were to...
And the one strategy that's become really popular lately is what they call serviced accommodation or short-term lets.
Yeah.
A lot of it in Birmingham. It's when you get a property, you stick it on Airbnb, Booking.com, or even your own website, and instead of having tenants, you have guests. Now... Look, I'm not the one that does this, so there's more experts out there. But essentially, they're paying you in advance. They're paying for cleaning. You've got a security deposit, and they don't have the rights that tenants have. In this country, tenants have a lot more protection than they should. So that's another strategy. That's if you buy a property, you own it, you get a mortgage, you take the mortgage off, whatever income you make is yours. Now, if you don't own a property, you could do what they call rent to rent. Very popular. You're a landlord. You've got this property that either isn't renting out or it's tired, it's old, you're just a bit annoyed by it. I come and say, hey, Abdul, you know what? My company will give you guaranteed rent for 5 years. Here's my bank account. I've got some money in my bank. I'm actually going to tidy the property up, spend 5-10 grand on the property, just tidying it all up. And I'm going to put an Airbnb. Is that okay? Yeah, you say that's fine. So it's with your permission, with your consent. Then essentially I'm going to control and manage the property. I give you the guaranteed rent. The profit is all mine. Now, the thing with that, or the issue with that, is a lot of the times it's actually against the mortgage. If you've got a buy-to-let mortgage, it will say you only can have a buy-to-let like tenant in there.
So technically, I'm not able to give it to you.
No.
To do what you wanted to do.
You're not meant to, but in that instance, the teachings or the courses or the gurus will say to me, as I'm the one trying to rent to rent, your job is to tell Abdul that he needs to make sure his mortgage is appropriate. How often will you really call your lender? You know, if you're getting guaranteed rent, how will they find out? All this kind of stuff.
See, this that seems a bit hacky, as in technically it's not on you as the person that's trying to get it off the landlord.
And I've got no financial commitment. I've not paid you any deposit. I might give you 3 months rent in advance, yeah, but I'm not giving you the 25 grand deposit you put in.
But then, see, me as the landlord, I'm kind of not honouring my mortgage agreement.
You're committing
But
mortgage
then
fraud.
who is to find out? Is that the kind of...
Yeah, well, you're committing mortgage fraud knowingly, if I'm honest. If you called the lender, right, and said,
That's crazy. A lot of these
listen,
rent-to-rent gurus are going to be like, no, how dare you say that?
if you called the lender and said, look, I'm going to give this property to Shaz Property Management. He's new. he's got no assets and he's going to manage my property. Oh, yeah, who's going to be in the property? No idea. He's just going to put an Airbnb. They're going to say no chance.
They're going to say no chance.
And then you if you say, oh, okay, thanks, maybe I'll change my mind, but you still give it to me, you're knowingly committing mortgage fraud. I'm not the mortgage police, by the way, do what you want, but...
Okay, so the people that are doing this rent-to-rent...
Sorry, I'm not saying it's all illegal. There are you can get mortgages for Airbnb.
But that's what I was going to say. So what's the likelihood of a lender saying yes to something like that? So if I was to... let's just say, Shaz, that sounds sick,
Yeah.
rent to rent. I don't need to put, no capital in any property. All I'm doing is taking someone else's property.
Yeah.
I'm putting it on the market and then someone else is renting it and I'm taking the profit or whatever. Sounds sick. Low entry to kind of get into. And let's just say I reach out to these landlords and let's just say I want to do everything by the book.
Yeah.
I don't want to go and do no sort of, dodgy business or fraud or whatever. And I say to the landlord, before I take on this property, I want to make sure that you're able to do this. You're not breaking any laws or you're not breaking any rules or regulations or whatever it is. What's the likelihood of them checking it and saying, yes, I'm able to do this?
I'm going to say 95% no. Because if you've got a buy-to-let mortgage, they valued it as a buy-to-let mortgage. They've assessed it based on the property rental. But what you're going to end up doing is completely different, right?
Okay.
However, there's ways around it, which aren't really ways around it. So some of the teaching is, instead of saying it's going to be Airbnb, tell them it's going to be a corporate let or a company let. So you just instead of a tenancy agreement, you just have a corporate let agreement.
This sounds too hacky to me.
It is hacky because a corporate let or a company let means it's employees of the company. So if I'm not putting my employees in there, it's not valid. But
so I think this is probably one of the...
but there's ways around it. The correct way around it is, let's say, Abdul, you're the landlord now.
Okay.
You've called your bank. They said, yeah, no chance. You're 3 years into your 5-year fixed deal. So if you left that deal now, you're going to be charged 5%, yeah, as a penalty. You could say, well, actually, I've worked these numbers out. Actually, it's probably worth still me doing this rent to rent. I'll just pay the penalty and then I'll get a proper buy-to-let, a mortgage that allows Airbnb.
What is there a specific name for this mortgage?
They're just short-term let mortgages.
Short-term let mortgages.
Mm-hmm. But you got to speak to a good broker.
Okay, is that something that you deal with?
Yeah.
Okay, so that's interesting because that's something that I've always thought about. Because again, it sounds very exciting.
It is exciting, but then if you think about it, it's actually quite hands-on. And it's basically hospitality. You got guests. You got to have cleaning. You got to manage bookings. What if you have two bookings?
I think if you're business savvy,
it's a business, exactly.
You can do it. Outsource everything, and as long as your sort of organization skills are on point and your timekeeping and all this other stuff, I think it's doable. Because any business, the way I see it is, if you're looking to make some good money in anything, you still have to have a level of organization, of
course,
and whatever
systems, processes,
whatever. So whether it's this or something else, you're still gonna have that same level of.
But then it's also things like, for example, a tenant will have a key. With the Airbnb people, you'll either have a key nest, key code. How are they gonna
What
get
did I
in?
do? Because I've used it Airbnb. They had a key in one of those boxes.
A key box thing, yeah. But then again,
is that like a security issue?
Yeah, but then you might have a call at 1 a.m. saying I can't get in. I've lost the code. I lost the key. These things happen, and that's when you get a bit more involved. You don't want that call at 1 o'clock, do you?
No, but then let's just say if this is like a 1 in 100 chance of happening.
Yeah.
The more you do the business, there's always going to be things that are going to be thrown in your way, and then you got to overcome these obstacles.
Absolutely, I think once you've got
business. I remember when I first started a dessert shop.
Yeah.
I had an idea of what it was going to be like. The reality was it was something else,
Yeah.
and those obstacles that came my way, I had to overcome them. Do you get me? And again, it's just like, so if people are saying, oh, but what about this, but what about that, but then that's just business.
If
That's
they're too
what
skeptical, it's not for them.
Yeah. Okay, let's bring it back. So like you said, there's kind of two ways to kind of go about it.
Buy property or manage people's property. There's also a third way.
Okay.
This is the lowest cost. This is like the lowest cost of entry, lowest experience level.
Lower than rent to rent.
Lower than rent to rent.
What's that?
Because with rent to rent, you might have to furnish the property,
Okay,
pay a bit
true,
to
yeah.
tidy it all up. You might have to give deposit. There's something called deal sourcing.
Okay, yeah.
So you know, like an estate agent, they work on behalf of the seller.
Okay.
Their job is to sell the property, get the most money for it, show viewings, blah blah blah. A deal sourcer works on behalf really of the buyer. And there's two ways they can do it. So you as a buyer, you might say, Shaz, you know, you're a deal sourcer. This is my budget. This is how much I want to make a month. This is my kind of area that I want to look at. Find me a deal. Or I might say to you, sign up for my email list and I'll send you some deals that I've got. They tend to find deals that are not on like the market. They're not on Rightmove, not on Zoopla. They've been direct to the landlord.
Mm-hmm.
Or estate agents might approach them before they go into the market. So a deal sourcer packages the deal together and says, look, this is the deal in this area. Property's actually worth 100k, but I've secured this for 90. They might say if you spend 10 grand on it, it'd be worth 150. All these sorts of things to package it as a deal to make it worthwhile for you.
Straight away, I'd say, if it's so good, why you not doing?
Because a lot of them have no money. So a lot of deal sourcers, because it is the lowest cost of entry, don't have the money. You know, they're also quite new into the property business. When they do their property education, they're taught that deal sourcing is a great way because, I guess how much they charge as a fee. I didn't tell you. How much do they charge?
Well, so
Typical.
From a deal sourcer. This is again a complete guess.
Yeah. How much would you pay someone to give you a good property deal?
Well, again, it would depend on how much the profit they're promising.
Interested?
Would it be like a percentage of the amount that they?
Nah. So normally,
I wouldn't trust that because again, that's a pure.
yeah, because the work isn't related to the
Yeah. £1,000.
£5,000. £5,000 on average is the deal sourcing fee. Now imagine you do 2 or 3 deals a month, which actually isn't a lot to sell on, yeah? And all you're doing is selling on the deals. Now, let's say you take a deal off me and the valuation doesn't come back as expected or there's issues with the property. End of the day, it's down to you to do your own due diligence so that you've paid them the fee to just secure the property, secure the deal. Yeah.
So let's just say, again, okay, so you're the deal sourcer and you've said to me, Abs, I've got this amazing deal.
Yeah.
You could potentially buy it at this much. This is how much money you need to put into it. Mm-hmm. This is how much you could sell it for. Therefore, this is how much profit you could be making.
They'll see words like BMV, which stands for below market value. It boggles my mind, right? Look, if you've got the street, you got a whole street, and the average house price on the street is £100,000. That's the average price. So there's some that are higher, some that are lower. If you've then got the worst house on the street and you've managed to get it for 90, and you're saying it's below market value, at that point it might be. But if once you view the property, if it's got damp, it's got bad floorboards, then it's not below market value. It's valued at that because it needs work doing to it. But yeah, you'll see a lot of these kind of things like BMV, which is below market value.
But you know BMV. Then it would be very rare to get a property below
market value
because everything's valued.
The market is the market.
Yeah.
However, there are some deals to be done. You might have a landlord who is just tired, wants to sell up. They've seen the interest rates are going really high. You know, they don't make any money. They've changed their strategy. They're selling their portfolio. They might be able to take a 10 grand hit because their mortgage is paid off or something. Mm-hmm. You might get a genuinely below market value transaction. But as a mortgage broker, I would say the amount of clients who say, Shaz, I've got this offer accepted. It's below market value. I'd say 1 in 100 actually genuinely is.
Yeah. No, but scrap that. Let's go back to deal sourcing. Like, let's just say, you've promised me X, mm-hmm. but then it's turned out to be.
So look, in the deal pack, normally it's like a PowerPoint.
Is it just this is what I think? No. It's up to you to do.
There's some evidence. So they'll say, look, based on the fact that these 4 other properties in a mile radius have sold for this is what this could be worth. So there is some evidence. However, you're still relying when you get a mortgage.
You still have to do your
own checks, and also when the test is when you then come to get the mortgage, or if you're selling it, whoever wants to buy it, they're going to get a valuation done. Mm-hmm. That value has to agree with those figures.
Yeah. Okay. So we kind of broke it down into like three ways of
Three ways,
getting into
yeah.
the property game. I think the most common and the most sort of traditional way of kind of getting into the property game is kind of buying and selling and buying and renting out. I think these new, also the other ways is kind of the new sort of way to kind of get into the industry. So let's just talk about the old traditional way and buying, selling, buying, renting. Okay, so as a property investor, as someone that wants to get a property to kind of rent out, what are the things that I need to be looking for? Where are the best places to kind of buy these properties, and what is a good deal?
Yeah, no, look, a good deal is a deal that makes you money, right?
Yeah.
In terms of areas, it does depend on where you want to invest and what your criteria is. You might say, I don't want to travel more than 2 hours to my property, so therefore you're limited with your radius.
Okay, and that would be only because it's easy to access. If
you wanted to be able to
wanted
access
to be like a hands-on type of person.
Whereas some people, like my client from London, he was happy to invest in Wales because the margins were bigger. I think generally, you need 25% deposit. If you're viewing properties, I think as an investor, you do want to buy the worst house on the street with a view to making it the best house on the street, because then you've upped the capital appreciation.
Okay.
So rather than waiting 25 years to value to go up, you've done that in a year because you've actually done a renovation, extension, whatever.
I want to talk about that. What do you mean by the worst house on the street? Because I know there's like, because I've been looking into it as well, and there's things like, so when I see or when I speak about adding value to a property, I see things as like kind of just modernizing it. So a buyer might, let's just say someone that's looking to buy their family home, for example, they'll go in, and if they look at it as if it needs a lot of work, they're not going to be willing to pay a certain amount. Whereas if you take that same property as an investor and you kind of modernize it and you freshen it up and you put like spotlights in, and you kind of put new floors, new carpets, new paints, whatever it is, new kitchen, new bathroom,
flooring, everything.
That kind of increases the values from a buyer's perspective, because it's just they can just walk in and they can just furnish.
So it makes it more attractive.
Yeah.
However, if you're thinking it from a rental point of view, by doing all of those kind of cosmetics, that's cosmetics, improvements,
nothing structurally or anything.
So all you're doing really is adding rental value.
Oh, so that doesn't add value to the actual...
Not as much as you think. The best way to add value to a property is to make it bigger or add more living space, therefore an extension or like an attic conversion, because you're adding another room.
Yeah, I thought as long as you do, I think so. They say that the bathroom and the kitchen are like the two...
It depends how bad it is in the first place. Do you know what I mean? So if it's usable and you're just replacing it, that's not going to add value. But if it's obviously...
No, let's just say if it's just dated, like kind of outdated.
It'll add rental value.
Oh, really?
Yeah. But things like damp and timber, if or rendering on the outside. What's that thing when you get those weird things on the roof? I forgot what it's called now.
Solar panels.
Not solar panels. Sorry, on the ceilings. I'm going to remember it now. It's when you skim the ceilings, they got these... asbestos comes out of it as well. But basically, if you fix a problem, you can add value.
Okay.
But like if you're doing things like, let's say in the bath, you change the silver taps for black taps because they look nice. That's going to add rental value, but not actual material value.
Okay, that makes sense. So if I want to, let's just say I brought a property in auction, because that's another thing.
Why would you buy auction? Tell me.
Auctions to me sounds interesting.
Does it not sound risky?
But more risk, more reward, isn't it?
Okay, fine. So with auction, just for your listeners and viewers, if it's a physical auction in person, you generally have 28 working days to make the payment. So you exchange on the day, you pay 10%, you pay a deposit. And when you exchange, you legally have to buy the property. You can't.
Isn't it the same with online auctions as well?
Online auctions get 56 days.
Oh, is it?
But then you pay a £6,000 premium.
Versus?
No premium on the in-person auctions.
So I'm paying £6,000 premium?
Check your auction pack, but generally with the online auctions, there's £6,000 buyer's premium. Everyone wants to make some money, right?
The cheek of it.
Yeah.
And that's not including the auction fees anyway?
Yeah, and you can't borrow that either.
Oh, so via bridging loan?
Yeah, you can't add it to your mortgage or whatever. So.
Oh, damn.
Yeah. So this is why auction is risky. It's good for experienced investors, or if you're cash rich. So let's say simple numbers. Let's say you buy a property for £100,000 at auction, and you're going to apply for a bridging loan, which we might come on to.
Yeah.
I would only do that for your first time if you've got 100 grand in the bank as well, in case your bridging loan doesn't come through quick enough.
Okay.
Yeah, your fees are adding up in your head. You're like, oh.
No, I'm just thinking because, I'm just thinking properties that go into auction are from people that want to sell their house quick and because they need the money.
Yes.
That's the way I see it.
Need the money, or it's not mortgageable.
Or it's not mortgageable.
I
and
always
if
see
anything,
people-
they're probably even better because the reasons why they're not mortgageable is probably basic reasons anyway.
Yeah, but you've got to, this is, I mean, you're clued up, right? I can tell.
Yeah.
But some people, they don't ask enough questions. They don't do enough checks. Why is it an auction?
Okay.
Why is it not? What's not mortgage about it? Can I actually fix that and get a mortgage on the back end? There's no
Okay.
point getting this auction kind of contract if you
Because
can't.
to someone that's normal, like they'll say, "Oh, that's not mortgageable. Must be like
Like a,
unsavable.
Yeah.
Must be
no, it could be something as simple as like
no heat water.
yeah, or structural issues, which you just got to get a repair warranty done on. Do you know what Japanese knotweed is?
Nah.
Listen, so when World War II, I think it was, in Wales, someone brought over this plant, like a
Going
Japanese.
deep now, guys.
Yeah, it's like a Japanese plant, right? And it was very decorative and all this kind of jazz. But it infected all the Welsh countryside. It's mainly in Wales. There's some in England. And that plant is so strong, it can actually go through concrete and break apart the structure of a property.
Wait, what's this called?
Japanese knotweed.
Yo, I want to see this. Sorry.
Yeah.
I know I'm just.
It doesn't even look that pretty, but you can eat it apparently.
Japanese.
Knotweed.
Is that KNOT?
KNOT, yeah.
Knotweed. Japanese knotweed.
But this can make your property unmortgageable if it's too close.
Yeah.
What does Google say?
Is Japanese knotweed illegal it is legal to have Japanese on your property, but you can be prosecuted or given a community protection notice
Wow.
for causing a nuisance if you're allowed to spread into anyone else's property.
That's how bad it is then, yeah.
Let me see if I can recognize this type. I'm sure I've seen this about. For the guys that are listening and watching, just sorry, I know we're kind of sidetracked. I'm just looking at some leaves right now, yeah.
He's looking at some leaves. He's going to buy a pack and put some...
If I want to buy a house for cheap, I'm just going to throw some knotweed in
Go
the
to Wales,
property.
but there's loads in Wales. And
Oh, is there?
if it's too close to the boundary of your house, it could be unmortgageable, or you have to get a treatment plan put in place with an insurance. It's that bad, like it's that serious of a thing. But so yeah, figure out why. What's the issue? Why is it an auction? Why is it
of course,
unmortgageable?
yeah.
And that's the same, Abdul. Like say forget auctions, you're just going through Birmingham City Centre or housing estate, and you see something that's for sale, cash buyers only. Why? Why is it cash buyers only? Because you need to understand what's wrong with it that makes it that.
Why would someone want to have cash buyers only? Is it because they just want? Well,
So
why would
one reason would be speed, because the mortgage takes 10 to 12 weeks to come through. Cash buyers.
straight away?
Well, that's another point. I don't want to digress, right? But it's not as if anyone has the cash in their
Yeah,
back
but
pocket.
who's got like 250
yeah.
cash?
So and also it has to go through solicitors who has to do anti-money laundering checks.
Mm-hmm.
So I'd still say about a week or 2 weeks for cash.
It's a lot quicker though.
A lot quicker, but it's not cash. Cash buyers only is speed, or they know that they've tried to sell a property before and it couldn't get a mortgage because of X, Y, and Z.
Okay.
Ask the question. Say, look, you could say to them, look, can I understand why is it cash only? I'm going to be taking out a bridging loan and then looking to get a mortgage, but just so I understand what's the history of this.
But let's just say if I come across a property that says cash only,
Yeah, you're buying it in cash. I can tell. Minted mine, isn't it?
well, one day, inshallah. But a lot of people will probably get skeptical and think, you know what, let's just stay away from this because it seems like
No, it's an opportunity.
yeah. But to someone that's clued on or someone that's watching this podcast is going to know that could be an actual opportunity to kind of get a property that's going to be worth it for you. And it's going to be a good investment opportunity because you can make
It could be as simple as that property was fire damaged and it's going to cost 10 grand to fix it. We, as a seller, we can't be bothered.
But it could be something as
simple.
simple as it hasn't got a boiler in there because it hasn't got heat. Like that's how simple.
No one's
it could
lived there
be.
for a couple of years. There's no working kitchen, no boiler,
no
no
work,
bathroom.
no taps, no nothing.
So that makes it unmortgageable.
That makes it unmortgageable,
But-
which is therefore
So a landlord wouldn't buy that, but an investor would, and that's the difference.
okay. That makes sense. Okay, but again, someone's probably thinking, okay, great, you want to buy something that's cash, but who's got 150, 200 grand cash to?
You'd be surprised.
Yeah, but is that where the bridging loan comes into play?
Yes. So bridging finance, think of it like bridging the gap. A mortgage is normally 25 years, 30 years for a mortgage, long term.
Yeah.
A bridging loan is normally 9 to 12 months, maybe a bit longer. It's quicker. A mortgage takes 10 to 12 weeks. Bridging loan takes 3 weeks to come through, as long as your solicitor is decent.
Yeah.
If you know any decent solicitors, let me know. But yeah, the purpose of a bridging loan is they will lend on unmortgageable properties, as long as you're doing something to make it mortgageable.
But you're still considered to be a cash buyer at that point, aren't you?
Again, it depends on definition. So I would be honest with the seller or the agent. Say, look, I'm going to be using bridging finance, because they might say, look, we've tried this. The previous buyer tried bridging finance. It didn't work.
Okay.
Unless you're genuinely cash, I wouldn't say that.
I've been told otherwise.
I know you have. You've been told all sorts. Speaking to the wrong people. Now, listen, look. You need to ask them, look, are you saying cash because of speed? Because I'm using bridging. It'll be arranged in 3 weeks. That ticks that off.
Okay.
But if you're saying cash because it can't be financed, that's a different thing altogether, right? You need to understand why.
Okay. Ask questions.
Ask a lot of questions.
And be truthful.
And be diligent.
Okay.
But yeah, so with the bridging finance, yeah, it can be used on properties that can't get a mortgage, as long as you're doing something to make them mortgageable.
But the thing with bridging finance is the interest rates are way higher than a normal mortgage.
Yeah.
They're very short term.
And what? Nah. And those two things balance out. So yes, a bridging loan is 1% a month, which is 12% per year. And a mortgage is what, 5% per year right now?
Yeah.
But you're only on that bridging loan for 6 months or 9 months.
Again, like you said, it's bridging the gap between you kind of purchasing the property and then for you to kind of
it's a means to an end.
It's like a tool in a toolbox.
Yeah.
If you use it correctly, it can be beneficial to you.
And also, I don't want to get too advanced, obviously, for people, but with bridging, you can also borrow money for renovations. So if your work's going to cost 50 grand, you haven't got it, you can borrow that as well. As long as the project works, they can do it.
Because, it's like bridging, whenever I used to speak about bridging loans or bridging finance to anyone around me, they're like, oh bro, stay away from them, it's scary.
Listen, it's scary. Okay, listen, tell them people, why is it scary? Because if they don't pay it back in time, they'll take the house.
And
if you miss 3 mortgage payments, what's going to happen? They'll it's the same exact same risk.
I think it's the interest rates that scare them off, and the fact that it's such a short-term thing. And again, the way I see it is like, if you're not using the tool for what it's meant to be used for, then of course it's going to be scary. But however, if you're equipped enough with the right amount of knowledge, it's definitely a tool that kind of opens up a lot more opportunities for you.
And this isn't just like a sales pitch, but I think that bridging loans and things like that is when you should use a broker or someone, just because they understand the market.
I wanted to get onto that because, again, someone that's probably looking to go into properties is not going to know everything. And I think having someone like a mortgage broker to kind of get advice from, or, to kind of help them to make the right decisions for them is crucial. I know there's a lot of information on YouTube these days that you can go out and do your own research, but why would someone use a broker versus doing it themselves?
Again, I think it depends on the kind of deal you're doing. So if it's mainstream or quite vanilla, you could go to your own bank. You could go to Lloyds Bank, and they might sort it out for you. But what you find is that these high street lenders, Barclays, Lloyds, Halifax, they are risk averse because they're banks, right? They don't lend to limited companies, for example. So if you're an investor, you might start buying in a company rather than your personal name because of tax benefits.
Yeah.
Those lenders don't like that. You'll be surprised how many lenders there are who are not on the high street, specialist lenders. Some of them are banks, but they're specialists. And they don't deal with clients direct. They want you to use a broker. That's one reason. It's just access to lenders.
Do brokers get better deals, generally speaking?
Nah. I've heard this before. No, but sometimes we get early access. So let's say if this lender... So I was meeting Shawbrook Bank today in Birmingham. If they've got a new product, but they want to limit the distribution, just see what...
You guys will get it first.
Maybe 2 weeks before. So I wouldn't say lower rates, if I'm honest. It's just exclusive access. So the first reason is access to lenders. Second reason is, right, okay, you go to Lloyds Bank. Yeah. Lloyds are going to say to you, look, these are our 3 products, 2-year fixed, 5-year fixed, 10-year fixed. Which one do you want? What they're not going to say, but if you go to Barclays down the road, they got a better deal. That's not their job.
Of course not.
And I understand that. But as a broker, essentially, we're in the middle to work on your behalf, to look at all the lenders, all the rates, look at what you want long term as well.
So do you do the comparisons and everything?
Yeah.
To get the best deal for your client. Okay. From a client's perspective, when you're doing these searches against these lenders, is that just one search on your credit file? Or is that
it's not even a credit search.
Oh, it's not?
No, it's not a credit search.
So if I came to you now and said, look, Shaz, I'm looking to
let's do it. Let me have a laugh.
We're doing a live deal now, yeah? I'm looking to kind of get a buy-to-let or whatever. This is my situation. Here's my salary. Here's my whatever. find me a good deal, and you can sort of get, as of right
So,
now, you'd be able to kind of see what.
Let me go behind the curtain a little bit, right? With mortgages, buy-to-let mortgages, it is quite simple in the sense of we use like a sourcing system. So you filled in your form, I've plugged that into the system, change a few parameters, and it spits out the results.
And this is exclusive to mortgage brokers.
Yeah, you have to be a broker, but it's a search-based system because all the lenders are on there.
Like confused.com, but with
like that,
lenders.
but with more up to date and more lenders on
Okay.
there. Yeah, that's a very good way of explaining
Yeah.
it. But then when it comes to specialist stuff like commercial, bridging finance, even short-term let mortgages, they're not on those systems. So then it's about experience and relationships.
Okay.
But even on those systems, right, just to talk through the process, let's say we've had a conversation and we've decided you don't want a 2-year fixed, you don't want a 10-year fixed, you want a 5-year fixed because in
We
5
believe,
years,
that mortgage.
rates are going to go down or whatever. We've had that conversation. So then with the 5-year fix, you've still got a few options, and this is my job to present them to you in the best way. So I'm going to say, look, Abdul, option A, this lender, it's the lowest interest rate, but it's got a high fee. It's got a 7% fee. But even despite the fee, it's still the lowest payment per month. Therefore, it's a cash flow product. Also, there's this product which got a higher interest rate, but the fee is low. And actually, over the 5 years, it works out the least amount of money. You're paying less interest back. So you can make a choice then. And again, it's up to you what you decide, but it's about presenting those options.
Your job is to present the information as clear as possible for the client to understand.
Yep.
And ultimately, it's their decision what they decide to do.
Yeah.
But
Whereas
you're just making their job a little bit easier.
on a residential mortgage, we have to give advice.
Oh yeah.
So there's difference. On a residential, it's a case of, Abdul, you told me that in 5 years you want to move to London because of your job. Therefore, I recommend a 5-year fixed. Whereas with a buy-to-let, it's non-regulated, means the FCA don't regulate the advice. There is no advice. It's a case of, here's what I think you want based on what you said. Which one do you choose?
On the residential, that is.
That's regulated, so you have to give you advice.
Okay, so residential, you have to give advice.
Yeah.
And that's not regulated.
No, it is regulated.
Oh, it
That's
is
why you
regulated.
have to give advice.
That's why you have to give advice. Okay.
I don't do regular. I stick with non-regulated.
Yeah.
Yeah.
Well, why is that? You just do.
No, because I do prefer working with investors.
Okay.
So all the investment stuff is non-regulated. Look, with investors, let's go back actually. With regulated residential mortgages,
Okay.
they do appreciate you a lot more. It's like my first house. Thank you so much.
Yeah.
Which is great.
Send you some box of chocolates.
Yeah. Instead of me, send me some chocolates. Put me on Facebook. But which is great.
Aren't the fees the same as if you was to do a
Yeah, all that's the same. But as a business, if I'm honest, you're only going to see them again after 5 years.
Yeah, there's not much. So the pie's not that big.
The repeat business or the lifetime
Okay.
client value
Okay,
isn't
yeah,
as high, right? Whereas with an investor, they're going to buy a property at least once a quarter, once every 6 months, minimum, right?
Okay.
And they're going to tell all their investor friends about you. So the referrals and the repeat business, lifetime client value is a lot higher. That's why I prefer it.
That makes sense though.
Yeah.
Because when are you going to see that residential buyer again?
Yeah, after 5 years.
Unless their kid, they've
Yeah.
20, 30 years.
And also from a fees perspective, I don't mind being really transparent. Investors, because they treat it like a business, they understand, yes, I have to pay a broker fee. They don't question it too much. They just crack on with it. Whereas first-time buyers, they've got a budget. They've got a clear budget.
Yeah, they're trying to save every single penny. Yeah.
There's that as well. Just so your listeners know, mortgage brokers, whether they charge you a fee or not, will still always get paid by the bank or the lender when the mortgage completes.
That's interesting.
So when you get your mortgage illustration, you get like the payment, the rates and all that kind of stuff. It should be on there as 1 or 2 lines that says, we will pay Shaz Ahmed, whatever, as a procuration fee. So we always get paid regardless. That's why some brokers don't charge, but it's nothing wrong with charging.
Well, what's the average fee for a mortgage broker? If you're being
upfront?
transparent, yeah.
I'd say about,
Do they charge a percentage?
some do, some don't. I don't. I charge 500 quid. I think 500 quid is about industry standard for buy-to-lets and stuff. Yeah.
Okay. I think that's fair.
I think I should charge. I've been told I don't charge enough for the value that I bring.
Maybe, and I think is it the sense of the more experienced a mortgage broker is, the more he should be able to charge.
No, you know what it is, Abdul. I know we're talking business talk here. But
Yeah.
I think
No, it's still a business podcast.
you're doing business, right? You're going to buy 4 properties in a year. You're going to buy 5, 6 properties in a year. I don't want to charge you £500 each single time. It's not fair. You're trying to run a business. Why would I charge you £500 each time you're doing it?
Oh, so you wouldn't do that?
No chance. I tend to charge £600 for the first time to get you onboarded, get you on the system. And then after that's lower. it's like 400, 450, because you're on the system, you're a repeat business, you're loyal to me. Yeah, for
So
me,
the way you make your money is from the lender, really, isn't it?
yeah,
The fee that you get from the lenders.
yeah. So I'm incentivized to get that deal completed as well.
But that's a percentage, though, isn't it?
That normally it's like 0.45% of the loan size.
Of the loan size.
So if it's deals in Wales,
Yeah.
if it's deals in Wales, they're pennies, right?
Okay. And so for you, is it beneficial to kind of go out there and explore outside of Wales? Because again, the deals are bigger, therefore your fees are going to be bigger, which again makes sense. Business is business at the end of the day.
Yes and no. Obviously, I think I do enjoy the stuff in Wales because they're smaller deals, but they do happen regularly.
Quickly, yeah.
They're quickly, and they're regular deals. And then, of course, I explore Manchester, London, Birmingham, because it varies the deal sizes. I think, just again, from a business side, I've been fortunate that a lot of my clients are big voices on social media, so they refer a lot of business over to me. So I don't really have to try too hard to lead gen. It just happens. Like,
Jeez. Humble brag.
that's another podcast on its own, right?
I think it would be interesting to kind of touch on that as well, because I think social media is, again, personal
Look,
branding.
you said to me, Shaz, you're everywhere.
Yeah.
That for me is the
But
goal.
recently, you've been killing it, man. Like I've seen you
but I'm not
literally-
everywhere. That's the thing. The goal is to seem like you're everywhere.
Literally, because what? How many followers are you on now? Like over 10K, yeah. And I think recently, I don't know if
Here's what happened. Let me talk you through that, because I don't have a strategy, but I kind of know what's happening.
Okay.
We'll do this podcast.
There's a method to the madness.
There is a method. We'll do a podcast. There'll be at least 3 clips, and you're going to post those for the week. So
Throw the buzzwords in.
So there's 3
you
clips.
Make £1 million.
You can make £1 million in property if you follow me. But there's 3 clips, right? So you do those. That's 3 clips done. Then if I go to a networking event, I'll post about the event. I'll be in everyone else's pictures. They'll post about it. We share stories. And then I might do 1 educational video a week. That's like 1 video a day minimum.
No, but that is a strategy. That's like a marketing strategy.
I just call it being omnipresent, being everywhere. And even if I don't post, it just seems like I'm everywhere because I get tagged in loads of things. Bro, I got a networking
You
event.
could be in at home in bed.
I am, honestly. I never post in real time anymore. Yeah. And I'll go to events and I don't like getting pictures taken. I'll never be like, hey guys, let's take a picture. But people are like, Shaz, let's get a picture taken.
Jeez.
And it's fine.
Again, another humble brag.
I've been told I'm like David Brent. But what I mean is, people do that and they'll share it and I reshare it. And it all just seems like everywhere.
That's the game, though, I think.
And it helps because it's all a bubble. So the property social media community is a bubble. So within that, yeah, I'm kind of regarded as a person who does that.
Now that we're on the topic, how long have you been active on social media? Not active on social media.
3.5, 4 years.
Since that time, has your business increased?
Yeah, listen, like I don't spend ads money. I don't buy ads. It's all personal branding. All lead gen is me. And yeah, networking and me being visible, posting, doing this kind of
So
stuff.
you definitely recommend it to other people to kind of, if you've got a business of any sort, especially service type business.
Service business, yes. I think
you have to if you're in
but
a
the
service
challenge is scaling. So I can't sell my business now because it's all around me to a point.
I think you can lift it off using your brand.
Yeah, I can get other brokers on board now and tell them you've got a built-in lead generation happening. You just got to service it, build your own brands as well. And no, so it's a longer game. In terms of networking, I heard Stephen Bartlett say this on a clip. I don't know which event it was. He was like, I don't see the benefits of networking.
Because of that?
Yeah, because if I post a video on social media, it'll be seen by 17,000 people or whatever. Yeah, I get it at that level. Yeah. If I was there, I wouldn't be networking around. But I think small business owners definitely have to be seen and be visible.
So networking has definitely helped you, though.
100% is key. Networking is key.
I was having a conversation with someone else on a podcast saying, you know, the people that you keep around you is also important.
Yeah.
And I know that people, you keep yourself around now, especially in your industry, is very important. Because, they're doing well, mashallah. Shout out to Adam.
My boy.
Yeah. We've had him on the podcast as well. And from then till now, the guys...
And so we met briefly at an event. He's like, oh, Shaz, Eddge was my client, said I'd speak to you. I was like, yeah, cool, let's catch up. But we properly met at a mixed grill. And I was thinking about this the other day, from that mixed grill we had, which by the way was in... What's that place? Champies. Is that Walsall? Champies. Bro, I hope it's halal. Yeah, they told me it was anyway.
If they told you it was, then what can you do, bro?
But the way they said it reflects. Yes, it is.
Yeah. Halal. Yes.
But from that mixed grill, I think it was like 10 of us there. We've all stayed in touch, and at least like 6-7 of us are just leveled up. So to be on that journey with the people is great.
That's good, man. That's good. Definitely surround yourself with good people, man.
Yeah, but back to buying property. Come on, let's talk. I don't want to talk about me.
I know we keep digressing, but it keeps the podcast interesting, I suppose. Okay, Shaz.
Yes.
I've decided now I want to be a property investor.
Okay.
What is the best strategy in 2023 for me to get started on?
In 2023, I would suggest looking at rent to serviced accommodation for cash flow purposes, or buying, renovating, and flipping to build a large cash pot. So that's 2 strategies for different end goals.
Okay, so you wouldn't recommend me going to an auction to buy a property?
Not for your first, not as a newbie, no.
Really?
I'm risk averse, man. Listen, I don't take risks.
I'm assuming that a lot of people wouldn't either. Especially when you've got family, kids, big responsibilities.
It depends on what you've got in place. Like I said, if you've got 100 grand in the bank, but you're still going to use bridging finance, that's not the issue. But you got money just in case as a backup.
Yeah.
Then go to auction. But if it's like you got no assets, you got low income, you live with your parents,
basically putting all your eggs in one basket. That's not the best route to take.
I wouldn't do that. No.
Okay, so what? But then it makes me think like, how else would I find a good deal?
So you can look at Rightmove, you can look at Zoopla.
Yeah, but I think then every other Tom, Dick and Harry is looking at
No,
the
they
same
are.
thing.
But
then what makes me think that I'm going to be able to find the best deal that every other...
You could pay 6 grand to deal sourcer.
Oh, well, yeah, I suppose.
No, honestly, for your first 1 or 2 deals, there is, as long as the numbers work, why would you
I don't know, man. I can't justify paying someone 5 grand.
Why not?
For something that I could potentially do, but I'm just not willing to do. You get me? So I'd rather be like...
Hang on, isn't that what outsourcing is?
Okay. No, but this is like the game, as in, if I'm just paying someone to outsource this, for example, finding a good deal, then what am I actually doing?
You're just putting the capital up, for a return.
Like I wouldn't learn, like, to find a good deal, you have to know the industry, you have to know what a good deal is.
Know the area, yeah.
If I'm just paying someone, it depends how you want to approach it, I suppose.
Yeah,
Isn't it?
and this is the answer to the question: is it depends.
It depends on how you want to approach it. If you're just a guy that's just got money and you're just willing to just pay your way to the top, then fair enough. But I'm assuming a lot of people are not going to be in that position that just willingly to give someone 5 grand, especially without learning and knowing the industry.
You'd be surprised because again, this is just social media, smoke and mirrors, and people just making big claims. If someone says to you, this deal will give you a return on investment, i.e. on your money, how much percent of 145%, based on their research, a lot of people will say, yeah, of course, but they'll bite your hand off for it.
I think I'm a bit of a skeptic.
I'm skeptic. It's an Asian thing.
Maybe.
Yeah,
but I'm thinking if someone's presenting me a deal, automatically I'm thinking, why are you not doing it yourself then?
Yeah, I mean, the answer normally is they just haven't got the money all the time.
Funds.
Yeah. But a lot of these deal sources, just to be, I know I'm ragging on them, they don't normally present straightforward buy-to-let deals. It's normally projects, i.e. renovation.
Yeah.
It's great, but then there's so many fail points. The renovation could go longer, could go more expensive, and value could not come up. So there are fail points. But someone wants to work with me as a broker. They would look at my social media. They would check out reviews. They get feedback. Yeah. Same thing with deal source. They check their feedback, check the testimonials, check what they've done.
I didn't even know that deal sourcing was actually.
It's a new thing, and a lot of mortgage lenders don't actually like it. So what I mean by that is, let's say you take on a stranded buy-to-let from a deal sourcer. If the mortgage lender, as part of their underwriting, says, we've checked Rightmove, Zoopla, we can't see that property being on sale, how did you find it? If the answer is deal sourcer, they'll reject it. I struggle to understand why. The reason they give is deal sourcers are working on behalf of the buyer, and therefore they're not official estate agents. They can't be doing that. It doesn't make sense to me. I think in time, when lenders catch up with what's going on and trends, they'll be okay with it. But generally,
you reckon it's something that's going to be regulated a little bit more?
Has to be. I think because they're handling a lot of cash for no guaranteed outcome, right? On that point as well, with the FCA, just to make sure people do the right thing, you might see it on socials. People raising a lot of money for investment.
Yeah.
So you might have 50 grand, you might want another 50 and you see people on Instagram saying, I need 50 grand, I'll give you a 12% return over 6 months. Have you seen that, first of all?
I have seen it, yeah.
Yep.
I wouldn't, because my circle is not very property
Sure.
heavy.
Okay. But once you get into social media property, you'll see that everywhere.
Okay.
That is breaking every FCA rule.
Oh, it is.
Right. So with the FCA, there's a couple of things. I'm going to post about this. This is very wordy. But the principle is you can't market opportunities like that for a return and guarantee a return on social media.
Oh, okay.
Unless you're approved by the FCA. So I'm FCA approved because of what I do, but I still wouldn't do that kind of post. Second thing is you have to be able to qualify the investor as sophisticated or retail. So a retail investor is just investing some of their money. They have no clue really about what's going on. Sophisticated investor, I believe they have to have 250 grand in the bank.
Yeah.
They have to either self-certify that they're sophisticated or they have to be sophisticated. So what you can do is, hey guys, I've got a deal. I need 50 grand. Please message me for more. Then have a conversation, but you can't openly market it like that.
Okay, but joint ventures, is that common?
It's very common. I mean, look, you would either joint venture because you have no money or you have no experience. And if you've got one in both, you just joint venture together. But do your due diligence, find out who you're joint venturing with, get it on paper. What are they going to bring to the table?
Yeah, I was going to say, like, I'm sure these can go sideways.
Always. All the time. Like I say, and a lot of the time it's because people just do it on trust. They don't do it like a business.
Have contracts in place.
What are the expectations? Who's doing what?
Well, even if you were doing it with friends, you'd
100%, man. Even with family, it's not being not trusting. It's a business.
Yeah, I think it's a sticky one, but I've come to a realization. Even if I was to go into business with friends, family, whatever, it's not because I don't trust you or whatever. It's just to kind of keep things clear.
And it protects you and me. So it protects us both, right? Imagine, look, let's say you went into a property project together and the deal went south and there was lending involved and they wanted to repossess, for example. Without contracts in place, you've both given personal guarantees, you're both liable. If there was contracts, it's a different story.
Yeah,
so
it's
you
more
have
clear
to
cut, it's more protected. Yeah, no, that makes sense. And I think business is just in general should be that way.
Absolutely.
Because things can kind of go into the grey area and then it's kind of like, that's when relationships can kind of get ruined.
Yep.
Okay. I did mention like how much money do I need, and you said basically 25%.
But that's just a deposit. I mean, there's fees involved as well, right?
Yeah. So if I was going down the route that you suggest of basically maybe finding a good deal. Okay, so again, I'm a guy, 9 to 5, 35k salary. I've decided today that I want to go into the property game. According to you, go into Rightmove or something like that. Try and look for, what am I looking for? Am I looking for a really bad property?
It depends how much time you've got, because I think some of the things on
I've got all the
Rightmove,
time in the world.
Fine. Well, then you can see on Rightmove or Zoopla, if you go into it with the filters, how long has it been on sale for, or has it been reduced? Those sorts of things will tell you.
So these are the things I'm looking for. So the longer a property's been on Rightmove, for example, that means that the buyer is probably getting a bit impatient.
The seller,
probably
yes.
scared.
Yeah.
Sorry, the seller is probably thinking, "Oh my god, I need to maybe lower the price."
Mm-hmm.
So you're looking at probably what they call a motivated seller.
Motivated seller. There you go.
Yeah.
You've been reading some books, haven't you?
Yeah, I've just been watching clips now that I want to look at, kind of go into it. So a motivated seller is someone that wants to kind of okay. However, if it's a newly listed property,
then it's fresh. They haven't tested the market.
They haven't tested the market.
If it's been on the market, let's say just for a little bit of time, not too long, but you can see it's been reduced. So in 2 months, it's had 3 price reductions. That's an opportunity. They just want to they just want to sell it. If it's been on for a while, you could call the agent and say, look, can I just ask, have there been other offers or applications in place that have fallen through?
Sorry, I just want to quickly ask one thing.
Yeah.
Okay, let's just say I've seen a property on Rightmove.
Yeah.
And it's come to an agency, something estates. Let's just say I want to contact the landlord directly.
Try it. I mean, no, you can't, because when you click the button, it goes to the agency. But if you see the outside of the property and you know roughly where it is, because Birmingham's a big place, you could try it. Yeah. I suppose that the contract is with the landlord to make sure they go to the agency. Yeah. So that's on them.
Okay. Does Rightmove have private sellers on there, or do you have to go through?
You have to go through.
Okay. So can I sell my property without going through an agency?
Yeah, you can list it yourself
on Rightmove.
Yeah, sorry, you can do it on Rightmove, but
it's unlikely.
It's very unlikely. Yeah.
Okay, makes sense. Okay. So again, back to things that I'm looking for. things that are potentially been on there for a long time or price reductions is a good indication of a potentially a good deal.
Yep.
Then the property itself, what are there any red flags that I should be mindful of?
Damp. If you see, or if you look at the pictures, any damp might be easily fixable, but it might cause an issue with lenders because they don't like damp. If it's near a commercial, so if it's near a shop or a pub opposite, that will
stay
affect.
away. Yeah.
Yeah, it just limits what lenders will lend because they don't really like that.
Oh, is it?
Yeah.
From a lender's perspective, you're on about.
Because when they do the valuation, they'll say, "Well, it's opposite a pub. Who's gonna want to live there? Therefore, we don't want to lend."
But someone's gonna have to lend, aren't they?
Yeah, so it'd be more commercial lenders. So rather than paying say 5%, you're paying 7 or 8%.
Oh, so these are the things. Okay.
Yeah, so this is why people will often send me a link on WhatsApp. Say, "Shaz, this property. What are the numbers?"
Okay.
If you're looking at flats or apartments, so houses are what they call freehold, which means you own the land and the house. Apartments or flats are leasehold, which means you just own the actual flat or apartment, but the land is on a lease.
Okay, so you own the flat, but on a lease.
Yeah, so you have a freeholder who owns the land, then you have a lease that you created for the flat.
Okay, let's just say I own the land and the.
So you're the freeholder.
I'm the freeholder, yeah.
Mm-hmm.
But I sell every single flat in that building.
So you create leases for individual flats, sell them off, yes.
But I'm still the freeholder of that land.
Yep. So what you need to look for with apartments and flats, it should say on the listing is how long is left on the lease. If it's like
they're usually like 100-year leases.
Yeah, and those are fine. But there are some, and this is opportunities, there are some that maybe 65, 60 years. If you're going to look to buy those, be mindful that the value will come in low. Because what a lender will say is, look, if we're going to give you a 20-year mortgage, in 20 years that lease is now going to be 40 years left. It's actually not worth much. So what you want to be doing...
What happens at the end of that lease?
They surrender the lease back to the freeholder. So what you want to be doing is speaking to the agent or the vendor, whatever, say, look, we're happy to buy it, but how much would it cost to extend the lease and what would that look like? Lease extensions for a piece of paper cost a lot of money, but they add a lot of value as well.
That just puts me off going to looking at flats in like...
I can see why some people do it, but as a long-term strategy, I don't think so.
Stay away from flats unless you're the guy that's building them and selling them.
Yeah, but the thing with flats as well is, and apartments mainly, is they are good for the Airbnb model.
Okay.
But, I love something button,
yeah.
But most leaseholds and freehold agreements, they actually say in there you can't do short-term letting.
Oh, so they
specifically prohibit. But I would say that's more of a historic thing.
Oh, okay, so it's just there as
if you can speak to if you've got access to the freeholder, if you know who that is, you can contact them and say, look, can we get that removed? Can we get that exempt? They might do it.
Or just don't tell them.
Mortgage fraud.
Everyone's doing it.
Nah, but what will happen is, let's say you did that, you wouldn't get a mortgage because the lender will check the freehold to make sure there's no restrictions.
I think I've got enough information.
Okay.
And now it's about just learning on the job, isn't it? And taking
the
risks and speaking to mortgage brokers.
Speaking to brokers, but I think also, like you keep saying, ask questions, man. Look, if you're paying me 500 quid,
yeah,
and I'll get annoyed that you ask me some questions, sack me off. Like, I'm here to answer, or brokers are there to answer your questions.
This is what I think. I think, again, when you have a mortgage broker on your team now,
I'm working for you, not the bank. That's the other thing, right?
Yeah. So now I'd feel more confident in the decisions I'm making because I've got someone that's experienced enough, that's been in the industry for a certain amount of years. That's got my best interest. And if I lose money, it's not going to be a good look on use it.
And if you're treating your property business as a business, you should treat me as the finance part of the business. And that's essentially what it is, right?
Yeah, 100%.
So there's things like people should ask, like, 2-year fixed or 5-year fixed. Why? What's the difference? What's the benefits? What's the pros? What's the cons? Yeah. And little knowledge is a good thing. You shouldn't have the foundational knowledge about why and what.
I kind of let's talk about that.
Let's do this.
5 years.
Yeah.
So historically, 5 years is normally more expensive.
It used to be, not anymore.
But that's what I want to get into, and we'll talk about the reasons why, just briefly anyway. So, okay, you've applied for a mortgage, and what they usually do is give you either a 2-year fixed rate, a 5-year fixed rate, or a 10-year fixed rate.
Let's say 2 and 5. 10 years.
Just keep it. Yeah, okay. 2 and 5 years, and then after that, what happens after that?
So you take out a 25-year mortgage normally, and you're fixed for 2 or 5 years. If you do nothing,
this is the interest rate that's fixed for
the interest rate,
either 2 years or 5 years, depending on what you choose.
Exactly. Now, if you did nothing after the 2 or the 5 years, you end up on what they call an SVR, which is the lender's standard variable rate,
which is normally quite high.
Usually, it's the Bank of England base rate plus like 2 or 3%. So it's very high. 10 years ago, that was very low because the base rate was low. But yeah, at the moment, it's very high.
At the sky high.
So if you took a mortgage with Barclays today, I would say there's a guarantee you're probably not going to be with Barclays in 25 years because you're always going to remortgage and fix away. Now, from an investor's perspective, a lot of investors will say, I want the 2-year fixed rate. And there's always valid reasons. Why do you want that? Well, the reason is I think rates are going to go down in 2 years, so I want to be able to review it, get a lower rate. That's a very valid reason. But then someone could say, I want a 5-year fixed rate. Well, why do you want that? Okay, well, I just want a budget for 5 years. I know what my payments are. I don't care about the rates. Okay, that's a good reason. I want a 2-year fixed rate. Why is that? Because I'm going to do a bit of home improvements. I'm going to add some value. So I want to pull some money out in 2 years.
I think now to get a 2-year fixed rate, you're paying a higher interest than versus the 5-year fixed rate because the banks have an idea or an indication that the rates are going to...
It's not... So how the pricing works, so the Bank of England base rate, whether that goes up or down, that just affects tracker mortgages, which track the Bank of England base rate. With fixed rate mortgages, there's something called a swap rate. So that's when lenders lend each other money for a period of time.
Okay.
So the swap rate for a 5-year period has been going down slightly over the last month. But because there's no confidence in the short-term economy, the 2 years is actually going up and up. And that's why the pricing's changed.
So let's just say I've got a fixed rate mortgage of 5 years. Let's just say after the 5 years, do I renegotiate or do I refinance?
It's really up to you. If you think, Shaz, you know what, house value's gone up, but I don't really care. I'm happy with the balance. I just want to fix it again. You could go to your current lender and just do what they call fix it again. The benefit of doing that is it's much quicker. It takes 2 weeks. There's no valuation. There's no legal fees. You're not paying a broker fee. It's rapid.
Let's just say the fixed rate is below what the standard rate is.
It usually will be.
It will be. And they will have to still fix it.
Yeah.
Even though they know they don't. Like,
but then what chances are...
you'll just go somewhere else, innit?
And that's it. So let's say... So you can either fix it with them and it's quicker, cheaper. Well, I say cheaper. It's quicker and there's less fees.
Yeah, or you could refinance it.
Or you can say I want to refinance elsewhere. Look at the whole market.
Which is what will happen 9 times out of 10 if they were to say no to a fixed rate again.
Yeah. And the benefit, if you want to look elsewhere, is you could look to borrow more money. You could say the value's gone up, the rent's gone up, I want to borrow more. Also, just to highlight, Abdul, as well, for your viewers and listeners, is on a residential mortgage for a house you are living in, the amount you can borrow is down to your personal income, and normally 4.5 times your income. On a buy-to-let, it's not. You have to have an income. They want to know what you earn, just as a general thing, but it's down to the rent of the property. So
okay, this is interesting.
Yeah. So the property has to be what they call...
So this is on a buy-to-let?
On a buy-to-let.
Okay. Before we kind of get into what you were saying, and remember what you were saying because it sounds interesting. Yeah. To get a buy-to-let...
Yeah.
Okay, me as a first-time buyer, I can't get a buy-to-let straight away, can I?
You can.
Oh, I can?
There's... Out of, say, 100 lenders, you might have 5 lenders. So it's limited. But yes, you can. As a first-time buyer, first-time landlord, you can.
And do you deal with that like you personally?
Yeah.
Because I thought you have to have a residential mortgage first.
No, so this used to be the case. And the reason that was to avoid what they call a backdoor residential. So someone would take out a buy-to-let mortgage. Because it was interest only, the payments are cheaper.
Okay.
And they would just live in the house, right?
Oh.
But now there's a few more lenders who are flexible. And often what they will do is they will actually test it as if it was a residential mortgage based on your income, but do it as a buy-to-let.
Okay.
So that's one myth. The other one that comes up a lot is, do I have to earn 25 grand to get a buy-to-let mortgage? No, there's many lenders out there.
What's the lowest income? I know, again, it probably depends on how much you're trying to loan
it depends on cash flow. So what they look at, there's a lot of lenders with no minimum income, but you have to have an income on paper. So that's whether you have a payslip or tax returns.
So you have to have an income.
An income. And what they look at is they'll say, send us your last 3 bank statements. Each month, what's money in, what's money out? Are you living comfortably or are you actually minus each month? If you're minus, you're a risk, right? So you don't have to have a 25 grand income to get a buy-to-let mortgage. There's loads of lenders out there, and a lot of them don't have a minimum income requirement. So as long as
a mortgage lender,
this is buy-to-let.
Buy-to-let, yeah. So we're talking about buy-to-lets now.
Yes.
Buy-to-let is if you basically want to rent out.
It's an investment.
It's an investment property. So it's not a property that you want to buy to live in. Yeah. Nothing like that. This is purely from an investor perspective. I'm looking to buy this property to rent out.
Yes.
Yeah. So I now have to apply for a buy-to-let mortgage.
Yeah. So they understand.
And you're saying there's some lenders out there.
Loads.
Not loads.
They understand.
Okay, as a first-time buyer, so bear in mind, let's just say I'm renting at the moment, yeah, and I have not bought a property ever.
So your first purchase is
my
an
first
investment.
ever purchase as an investor, and you say you saying that I can
Yes.
get it.
Because they understand that you're not going to pay for that mortgage from your pocket anyway. It's going to be rented out,
Which makes sense.
which makes sense. But you have to have some income
You
to
have to
live. You have to live,
can't
right?
You can't be unemployed and
Yeah, or you can't be declaring no income and doing
Yeah.
taxis, for example, right?
Yeah.
Because it happens a lot. So they look at your couple of bank statements, money in, money out. What's your cash flow? You also need to have like 3 or 4 months worth of mortgage payments in your account as a buffer to cover voids and repairs,
Okay, so let's break that down
Yeah,
again.
yeah.
So you have to have an income.
and your cash flow has to be positive. That's the key thing.
Yeah,
right?
so cash flow meaning your
Money in,
outgoings
money out.
are lower than your income. And is there a safe percentage?
No. It just has to make sense. It has to be plausible.
Okay, so let's just say you're buying a house for 100 grand, just to kind of keep the number simple.
So if the mortgage payment for that was say 500 quid a month,
Yeah.
you
so
need to have like 2 grand in the account as a buffer anyway,
Okay,
on top of your deposit.
on top of my deposit.
Um,
And then what about my... Oh, but then, yeah, my income's not...
It's
yeah.
not relevant as long
Yeah,
as
it's
you
not
can support
relevant.
your own
Yeah,
lifestyle,
yeah,
right?
Yeah. Okay.
Yeah, and that's
Again,
it.
I'm going back to residential sort of...
And just to kind of get a little bit deep into it, the way they stress test the buy-to-let mortgage is the rental needs to cover the interest-only mortgage payment, but at a ratio, so at an enhanced level of 125 or 145%. So if the mortgage payment is 800 or 500 quid a month,
Yeah.
the rent needs to be about 750.
Okay, so 100 plus 50, another...
125 and
25%,
45.
Yeah. Okay.
And that's just to give it a
Which
buffer.
makes sense anyway.
Yeah.
Because-
This is business, isn't it? This is basic business
So
stuff.
you know, buy to let, you were saying interest only. What do you mean? Like, are they all interest only?
No, you can have it as capital. So interest only means you just pay the interest each month.
I'd want to. It makes sense to kind of keep your repayments low each month, but then would you want to build equity in that property? by
Again, it depends
doing
what kind of
repayments?
investor you are, right? So
See, I'd be more inclined to go down the
you're Asian, that's why.
I
Because you want
wanna-
to own the property in 25 years, give to your kids.
Not even own the property. Is like when I do go to sell it, I've got more chunk in it, if that makes sense. Because let's just say I need a bit of money in the next 5 years. It's like a savings, isn't it? You're just building equity.
It's an equity pot, yeah. No.
Yeah.
So most investors, I'll be honest, that I deal with take interest only. So it's interest only. It's a lower payment.
What do you recommend? Like, what would your advice be to someone?
Um,
Why would it make sense just to do interest only?
Cash flow.
And that's because
Because right now, especially right now with rates
Okay,
as well.
right now it makes sense because everything's so high anyway. That to me makes sense as to why.
Having
someone
said
would
that
go to
though,
interest
like let's
only.
say that 25 grand deposit that you put in for your 100 grand property, if that's money you can just set and forget,
Yeah,
and as long as the rent covers the full capital repayment mortgage,
yeah.
you could do that.
No, but then I wouldn't feel comfortable renting it lower than what that.
No,
number
as
would
long as
be.
it was balanced or thereabouts.
Okay, because rent is increasing anyway.
Rent should be increasing.
just
It's
as
been
much
slow
as-
though. It's
just-
been slow.
oh,
And
is
with it- yeah, landlords I'm speaking to, like the rents have been increasing, but not in line with how the mortgages have been increasing.
Oh, so the mortgage are increasing faster than what the rent.
Yeah, but then the rent's not been increasing so much because they expect the rates to go back down again. So
Okay.
it's a tough one, isn't it? You can't, because obviously you put a tenant on higher rent. That's a 1 year contract, and if your mortgage goes down in between,
If I was to come to you and say, okay, I want sort of quotes on what my repayments would be based on either in interest only and
yeah,
what's it called, like a
interest on your capital and repayment.
capital repayment, would you be able to do
Yeah,
that and
yeah,
say,
yeah.
okay, if you were to just get an interest only, this is what your repayments would be?
Yeah.
Versus, okay, let's just say I'll go for the capital repayment mortgage. What percentage of that payment goes towards the actual mortgage and what goes towards the interest?
There's no real formula. They'll on the illustration they'll give you like a rough idea.
Most likely, is it more towards the interest and then
Yeah.
a little bit towards the
Yeah, right
actual-
now it is. Yeah.
Okay.
And that's the other thing. Right now, because the rates are higher, the capital part just is lower in the initial years.
Yeah. Okay. This is interesting.
We're going to make you a property millionaire in 7 days.
I think we could do this, you know. Okay. Another thing I wanted to talk to you about with the buy-to-lets is buying through a limited company. Now, again, I've just opened a brand new limited company.
Yes.
Zaman
Zaman Estates.
Zaman
Oh,
Estates.
estates,
yeah.
real estate.
Yeah, Zaman Estates Limited. what do I need for the lender to be confident enough
Yeah.
for me as a limited company to give me £100,000?
Yeah, no, good question. So, as a brand new limited company, they will underwrite and look at all directors on the company. So, if it's you as a director on your own, it would pretty much be like a personal mortgage application.
All right.
It's just there's a layer on top that's a company wrapping it all together.
Okay.
Let's say it was you and you had your brother as a 50% shareholder.
Mm-hmm.
He might have to be on the application as well because he's got such a large shareholding. You would have to give a personal guarantee, which is limited company mortgages, from a mortgage perspective, add on to your legal fees quite a lot because the solicitors have to do extra checks.
But then what's the point of doing that?
Because there's tax benefits.
Okay, so the reason why someone would buy a property through a limited company is because of tax.
Because long term, they plan to have 3 or more properties in the future, and therefore there are tax benefits they can do. So let's say you bought your first 2 in your personal name, then you got your company, and you say, I want to put those in the company. You can't just put them in, you have to buy them. So then you have to pay stamp duty again, so there's no point doing that. So starters, you mean to go on.
Yeah, because that'd be why can't you just leave those 2 properties?
Oh, you could, but then you're not getting, you know what?
You're not
maximising the tax efficiency of the benefits,
Okay. But it's just a ball ache at that time to kind of.
So I would start, as you mean to go on, speak to like a property tax specialist whose job, so not an accountant, like a property tax specialist whose job is to understand your longer term goals.
Is there, okay, if let's just say again, I'm looking to take this seriously now. When it comes to my finances, is there people that specialize in property finances that I need to talk to rather than just a normal accountant in business?
Yeah, there's, I mean, they literally will call themselves property tax specialists.
Property tax specialists, okay. So, and you recommend definitely getting one of those on board?
Yeah, and they, to be fair, they'll give you the advice. They might have like an hour-long session with you, and then they won't be your accountant. They'll just give you that consultancy and what, that's it.
And then what, per project, you just pay them whatever?
You might revisit it once a year perhaps and say, look, this is what we've done, this is how much I've saved, is there anything else we can do? What kind of tax allowances can I do?
With business accounting, you just pay them on a monthly basis. They do all your accounts and stuff.
But if you think about it, with an accountant, they look at stuff after it's happened.
Yeah.
Yeah.
Oh, these guys are just trying to direct
They're giving
you
strategic advice beforehand.
Yeah, it's like what makes financial sense.
Yeah. I think everyone should have a tax advisor. Anyone in business should have,
Okay.
Guys, advice before you do what you're going to do.
Guys, we're going to become millionaires after this, I'm telling you.
Yeah. Can we talk about gurus as well, please, and courses?
But that's actually a good valid point because there's so much, there's so many gurus out there. Mm-hmm. I'm just trying to think. I think
but it's not just
someone
property.
that I do watch.
Go on.
Who I have come across.
So what I'm going to hide my face.
Samuel Leeds.
Yeah. Nah, to be fair, Samuel Leeds gets a lot of stick.
Yeah.
However, a lot of the investors that I know have been on that 1 day course or the £1 course. Yeah. Now they may not.
He's got a £1 course.
He's got a one day £1 thing, right?
Okay.
So they've been on that. Now they may not have had any further coaching from him, but they can all trace it back to that £1. So it's like, does that mean he's a good trainer? Probably not, because he didn't train them, but he may have opened their eyes to what is exactly. So yeah, he gets a lot of stick for different reasons, but I think he must be getting.
I've watched his stuff. I think he's all right.
He's okay.
I think he simplifies stuff a lot.
He's a very good orator, very good speaker.
Yeah.
He's from the Midlands, isn't he?
Is he?
Yeah, which gives him a big up already. Oh. But there's loads. I mean, there's loads, obviously. But I think because I'm on the other side of it, when people are applying for finance or actually have live portfolios, live deals, you're not going to get rich quick in property.
Yeah.
But you will get rich for a longer time because it's an asset, it's tangible, right?
I think it's like the most secure way of.
And it's a reasonable way. If you think about it logically, you've got this property. The property goes in 13-year cycles where the value goes up and it goes down and goes up again. And it's historically, like, if you look at data, it happens all the time.
History just repeating itself. Yeah.
It's a tangible asset. You could sell it. You could hold it. It's not like cryptocurrency where it's based on belief. Yeah. It's an actual thing. Property stock in the UK is always in demand. There's more demand than there is houses. You've got companies like John Lewis and Lloyd's who say they're going to buy houses or make new built properties. So the market is there, but you got to do it the right way. And I think it's not just property gurus. I think the wealth creation industry as a whole.
Yeah.
I see like Forex courses, trading.
Whenever I see a mastermind.
The
word mastermind just puts me off.
Mastermind or inner circle with 50 people. How big is that bloody circle? Do you know what I mean? So I think if you're thinking, I think education is very important. I think get yourself educated to a certain degree. Now, whether you need an actual course or whether you can go on YouTube or Google because all the information's there, one's not worse than the other. People can go on Google and just understand some things.
I think what a course does, it kind of just packages it up.
It packages up, and that might that might take you a few hours to do it if you did it yourself. So I get the benefit, but if the mentor, if they're making more money from delivering the training and having the mentees than actually running that business, that's a red flag to me.
I think that's probably a lot of the time. I think that's.
Of course, it is. It's easier. You deliver something once and you make the money on a repeated basis. But
I think people then fall into that trap of just going into the course making,
and also course going. Dude, like I see people. Look at what you guys started. I see people who've been on 5 different courses. They've joined this mastermind, this inner circle, this group, this accountability thing. And they're not buying any property. That money you spent there, you could be buying a property.
Yeah, I think one thing I'd like to stress on this podcast, on this topic, is don't be one of those people that just consume knowledge without no execution.
Take the action. Yeah.
Which is one of the reasons why we're doing this podcast. But yeah, without action, you're not going to make that next step. You're not going to progress any further. Just in business in general as well. You could read as many books as you want. You could go to as many courses as you want. But until you make that first step into business, that's when you're really going to learn what business.
Yeah, you got to take action on what you've learned. And, going to the course isn't the thing that's going to make you a property millionaire. It's actually buying the property and applying.
I think it's just that sense of like people are just scared or anxious to kind of.
It's similar to, when you people go to university, they do a master's and then do another master's because they just don't want to get into the real world, right?
Yeah, they're just kind of hesitant.
If you've got all that money to spend and waste, that's not wasting, that's too strong. But if you've got all that money to spend, you need to do the learning, apply it, learn, apply. There needs to be a balance, right?
Yeah.
Otherwise, you end up in like a negative return because you spent so much money on nothing.
Oh, I think you're right. But yeah, I think I'd just be but for me, I didn't like. I think I'd be the type of person that would just watch a few videos, talk to people that have actually done it.
You'd network off the people off the videos, right? You'd be like, this guy's good, this guy's good.
Because then I can ask direct questions like I am now, and then just do it.
Listen, I know a guy called Alfred from Coventry, right? He charges like a ridiculous amount for a phone call, but he's like, I spent 20 grand to go to Grant Cardone's resort. Spend time with them, so I value my time at X. This guy's done like 15 HMO conversions in Coventry, so I think it's worth every penny. Like,
yeah.
You got to know who to approach.
Yeah.
Know
who you're getting your advice from.
Yeah, and do your own due diligence. Social media is so difficult because you can create a persona and make it seem like you're doing bits when you're not. You could hire cars in Dubai. You can drive across that bridge a couple of times, but you got to be doing the goods as well.
Okay, before I want to talk a little bit more about HMOs, but before I do, kind of going back to sort of the buying, selling, renting strategy, which is probably like the most popular strategy, I'd say.
It's the most straightforward.
It's like that program Homes Under the Hammer.
Yeah,
that kind of gets me fired up.
Does it?
I love that program.
Okay,
because it kind of makes me think, oh shit, like I definitely need to get into the property. Because
what about selling sunsets? I don't know. Selling luxury real estate.
It does, to be fair. Like I've actually watched it.
That show is crazy, not for the women, right? But for the fact that it seems like everyone in America's got cash. They're not doing they're not doing like mortgages. It's just cash.
The commission that this show is not actually real.
It must not be net. That must be the gross commission. There must be so many deductions off it.
Yeah,
that's all it is.
Because there was one of the girls, I think she left the program and then she kind of spilled the beans on. She's
just bitter she wasn't good enough.
Yeah, she was one of the hated ones.
Yeah,
I'm kind of. Yeah,
but a lot of those agencies are coming up now in the UK. Tara Nash, Newman, Tyler Newman does one.
If I wasn't doing what I'm doing, like with the whole web,
you do luxury real estate.
I'd go into real estate. I think.
What, the videography or actual luxury real estate?
No, like if I wasn't doing like web design and podcasts and whatever, which is what I do. I think either cars or property. And I think after watching these programs like Selling Sunset stuff, I can't believe I'm admitting this on camera.
It's not a guilty pleasure. I am not guilty about watching Selling Sunset. Those two guys who run that business, they're two short kings. I can relate.
Yeah, they're actually really short, aren't they?
Brett and what's the other guy?
But they're killing the game though.
Listen, they're smashing it, and they're so good at it. They know what they're doing.
Yeah.
But yeah, there's a lot of these similar kind of agencies in London now.
Yeah. What just like sourcing
Luxury real estate, like
luxury
£1 million
real estate,
and
yeah.
stuff. Yeah.
Is there enough luxury real
You'd be
estate
surprised,
in the
man.
UK to do that though?
Yeah.
Because it looks like in America, like every other property is like.
In UK, I think the argument is the market needs to be changed. Like an estate agent sat in a high street, putting stuff on Zoopla, that's all they're doing.
That's literally
but
what
they
they're
get
doing.
it's not their fault. They're getting paid that money to do that. Whereas a self-employed, property broker is going to wear a smart suit, going to show you around, do a drone video.
I think that's the game, innit?
And you're happy to pay the extra commission because they've just got your household.
Mm.
So that's another way of making money in property is through luxury real estate.
Doable.
I think you smash it do it for the Desi audience, yeah.
That's the audience, innit?
Desi real estate.
Oh gosh. Okay, so
Go on.
I brought a property.
Yes.
Cosmetically, I've done it up.
Black taps.
Yeah, black taps on all that, grey walls,
Yeah.
grey carpet. How would someone know when to buy and when to sell? When to sell or when to rent?
I would do that research before you buy in the first place.
Okay, so my intention before buying a property, I would already know if I'm doing this to buy, to sell, or if I'm doing this to rent.
Ideally, the deal should work on both in terms of numbers. So what's the end value from a sale perspective, or what's the rental value? It should work on both.
Okay.
But you should have both exits planned.
Okay.
So yeah, plan A was to sell. But let's say then you've put it on the market, it's been 3 months, no one's buying it because the market's crap and whatever.
And at least you can put it on rent.
Yeah, then you start a remortgage process and remortgage it.
Refinance it. Okay, cool. Okay, so another thing that people might not understand as well is the whole concept of refinancing versus selling. Because as far as I'm aware, and the strategy that I would use is, let's just say I found a good property that I think is worth for me to buy. I've gone ahead and brought it, whether that's through an auction or whether I found a deal on Rightmove. Whether I've done it through a bridging loan or whether I've done it through a normal mortgage or whatever it is, I brought the property. I've redone it. So I put let's just say I brought it for 100,000. I've spent another
You've added value to
10,000
it, yeah.
renovating it, wherever. Maybe I did a dormer.
Yeah.
So at that point, someone would be like, okay, let's just sell it. But then you'd have to pay capital gains tax and everything else like that. Again, there's probably things that you can do to limit
Offset that through a company because your expenses.
The expenses, everything like that. However, you could just refinance it, which means you get your money back out of it, and then you just put it on rent.
Yeah, and this is why it's beneficial through a company, is if you refinanced it, let's say there was a profit of 10 grand, 20 grand afterwards. If you keep that within the company for your next investment, you're not paying any dividends, you're not paying any tax on that, right?
Yeah,
that's why the benefit
because
is.
it's a debt at the end of the day, isn't it?
Yeah, no, plus it's still within the business. You haven't drawn that money down. You don't take the salary or dividends.
Okay.
I think you wanted to ask about HMOs.
Yeah, so let's talk about HMOs.
HMOs.
What is okay, HMOs.
It's a house of multiple occupancy.
It's
when there are 3 or more unrelated individuals living in a property. It's what they used to call like house shares, student house shares back in the day. There's a lot more regulation, a lot more stuff in the council now that you have to be wary of.
Okay, I've got a property in a very studenty area.
Okay.
4 bedrooms. I want to stick 4 students in there with separate tenancy agreements. I have to. Is that an HMO?
Yeah, if they're all unrelated, so that's 3 or more unrelated.
Yeah, 4 students are unrelated.
That becomes a HMO. They all get they all get their own ASTs, tenancy agreements. They all sign separately. They're all individually for the room. So what that means is, one student could fall sick and leave the house. Then you could have 3 rooms occupied, 1 empty. That's going to affect your payments and stuff, right? And your rent.
Yeah, of course, yeah.
But that could happen. What investors tend to do is, for the HMOs, they normally look for a minimum of 6 bedrooms.
Minimum of 6 bedrooms?
Yeah. I'll tell you why.
Okay. Before we kind of get to the 6 bedrooms.
Yeah.
Let's just break this
He's
down.
like, where's the 5th
gone? Let's break again, let's go back to the 4-bedroom house.
Mm-hmm.
If I was to rent that out as a whole,
so let's say the house,
get a rental.
How would you get per room? 300 quid a room.
No, let's just say if I was to rent the house to like a family or wherever it is, £800.
Yeah.
Versus per room per week,
£300 a room
Yeah.
per month. So you say you get £1,200.
Let's just say what's that? Probably about £100 a week, isn't it?
Yeah, roughly. Goes a
Yeah,
bit more.
£100 a week.
Yeah.
Let's say £400 each for bedrooms. 4, 8, 12, 16.
Yeah.
That's
So
£1,600.
suddenly, yeah, exactly. But
Versus-
imagine
that's
when the
double?
room is empty. So then it's the issue, isn't it? And that's why they look for more rooms.
Oh, okay.
So what people do is they'll have a 4-bedroom
so
house.
that's why. Okay.
Yeah. So look for 3 or 4, normally 4-bedroom old Victorian houses. So the reception room's massive and there's a big massive bedroom upstairs. If you're gonna go the cheap route, is you're gonna just put stud walls in,
Yeah.
and suddenly now you've got 6 bedrooms. But
Okay, but is it classed as something else when it's minimum of 6 bedrooms?
no. So up to and including 6, you can do that within permitted development.
What does that mean?
So in the UK, you might know if you do any kind of extensions, you can only extend so much
Yeah.
under permitted development without going through planning permission. And it's the same, you can go up to 6 bedrooms without planning permission, unless you are in an Article 4 area. So Article 4,
Which Birmingham, if you're in Birmingham.
Birmingham is, Wales is, and there's a few areas,
It's
obviously,
Wales as well, yeah.
all of Wales is, unfortunately, yeah. But all that means is that if it's Article 4, then for anything you just need planning permission, right?
Okay, so if you're in somewhere in the UK, outside of Birmingham, you might be in a place where you don't need planning permission to do a HMO.
Up to 6 bedrooms.
Up to 6 bedrooms. But as soon as you hit 6 bedrooms, so up to 6 bedrooms, meaning including 6 bedrooms.
Up to and including.
So if you've got a property that's got 6 bedrooms, you may not need planning permission. However, if you're in a position in the UK where there's Article 4 that's in
Article
place,
4.
regardless of whether it's 1 bedroom or 6 bedrooms or
For a
8
HMO,
bedrooms,
yeah.
for a HMO, you have to have
But to
planning
check that,
permission.
you can go on gov.uk or your council website, it shows you a map, then you can just see where these things are.
Okay, that makes sense.
Okay, up to 6 bedrooms.
Yeah.
Whether you need planning or not, you just check that.
Okay.
But typically, what investors do, because they're trying to spend as little as possible, is they'll just put stud walls in.
Okay.
And suddenly you've got 6 bedrooms.
But what's wrong with that?
Would you live in? That's the question.
No,
I
but-
asked to my investor. Would you live in? Would you? They're like, nah, of course not. I'm like,
Well,
okay.
because it's a thin wall.
Well, it's a small room,
Okay. Another
but there's
interesting
minimum
point.
room style size.
Yeah, this is what I was going to say. Yeah.
Yeah.
Okay, so now, the whole, without the planning permission, is there certain requirements I need to
Yes.
have?
So you've got to also be careful and mindful for HMOs. HMO planning and HMO licensing are different things.
Okay, HMO planning and HMO
Well,
licensing
licensing
are two different things.
So
guys.
planning is what the council will give you in terms of planning permission to change the property.
Okay.
Licensing is the property and are you a fit landlord to have a license to run it as a HMO?
Okay. This
It's
is
all just money and it's all fees, right?
Okay. Again, this is only under Article 4.
You need a license to run a HMO anyway,
Okay.
regardless.
Okay, so if I'm not, so let's just say I'm not in an area with Article 4.
You still need
in
a HMO
place,
license.
I still need a HMO license without the planning permission.
Yes, correct. Licensing is mandatory.
Okay, so you have to have a license. And how do you go about getting this license?
Get in touch with your council. They'll visit when the property is kind of finished, ready to rent out.
Do I need a special mortgage to do a HMO, or is it?
Yeah, you need a HMO mortgage as well.
So I need to have a HMO mortgage.
And this again is why, to go back to why use a broker, the high street lenders don't lend on these things. So like Barclays, Lloyds.
These are specialist lenders.
Mm-hmm.
Okay, I might have a buy-to-let property,
Okay.
and I've decided now. I've heard you speak about HMOs on one of your videos, or they've listened to this podcast and thought, "Yo, why am I getting £800 rent when I'm in a area that I could rent out a room and get double the rent? Cool. I want a HMO.
Mm-hmm.
What do I do? So I'm not in an Article 4 area. I just go and contact my local council and say, look, I want to apply for a HMO license. Is that how easy it is?
Yeah, you contact now. They'll come and visit. They'll do a little questionnaire. Most councils are taking 6 to 9 months to issue the license,
6 to 9 months.
but
Yeah.
because it is long, you can rent it out as a HMO as long as you've had the inspection done.
Okay.
Unless there's major red flags and tell you on the day, look, you can't.
Okay. Again, I'm just going to keep breaking this down.
Yeah.
I've got a property. I've
Yeah.
applied for a HMO license. They've said, okay, cool. We're going to come down to your property, inspect it. What are things that I need to be mindful of in order for me to pass this inspection?
The main things are minimum room sizes. Each council will have a different expectation. So
And this will all be on the government website.
all the guidelines that speak. So you might want to speak to an architect or someone just to go through. So room sizes, fire doors. You have to have different kind of doors and windows for HMOs. And again, it varies by council. Some councils have like an expectation of a communal area. So you can have 6 bedrooms and you've got somewhere a shared space, but that could be the kitchen. It depends on the council, right?
Okay.
So yeah, those are
Double
the three
check with the
things.
council and stuff.
Everything, go on the website, check their list of things. Speak to other investors in the area. Ask them, say, look, by the way, I'm doing this. Any tips? Guys, investors love telling you about themselves and their projects.
Yeah, they love talking. Yeah.
So ask them as many questions as you want.
Okay. So then at that point, let's just say you're in a position. Okay, I've done all the checks. They all meet the requirements.
You applied for your license now.
Okay, I've applied for my license. They've come down. They've inspected it.
And
they've said,
and on the day, they've not said, by the way, this is not gonna. They're not said to you, you know what, that room is too small.
Oh, they won't say that.
No, they'll tell you that if it's a fail.
Oh, they'll tell you.
They'll tell you there and then. But if not, we'll come back to you.
Okay. So 9 times out of 10 at
Which
that
means
point,
why you can start doing it as a HMO from the day of the inspection.
Okay. Got it.
Yes.
Makes sense. Okay. However, if you're in an Article 4 area, before you apply for the license, you have to get planning permission.
And that could take ages. That could take absolutely ages.
And that's the ball ache of it all.
That's the ball ache, and that's Article 4. But even if it's not Article 4, and you're going above 6 bedrooms, you're going 7, 8, 9, whatever, then you need planning anyway.
Okay, before we go to 6 bedrooms, I'm in Article 4. I've got 6 bedrooms.
Yes.
So
put stud walls in.
Yeah. I've done whatever I needed to do. However, it meets the guidelines. It meets all the requirements. What's the difference then between planning permission versus applying for a license? So what's planning permission?
So planning is more to do with the property and the size and the build of the construction of the property, the structure, the floor plans.
They're just making it hard.
Yeah, because even if you weren't doing a HMO, even if you're doing like a big garden extension, that could mean you need planning.
So why does that take long versus just me applying for
the
a
councils
license?
are busy. That's simply it. They're understaffed and busy.
So what do they do in this whole planning permission process? Do they come and visit the property?
They come and visit.
But doesn't that sound like the same as just getting a license?
The license is more for the occupants and you as a fit landlord. The planning is for the property in general. The planning will also put a notice on the council website. Are there any objections? And when you see those things,
yeah.
That's what the planning side of it is. The planning will also take into account, for example, okay, you're going to make this 6 bedrooms, 6 separate people. There's no car parking space outside. Like those kind of things.
Okay.
Will this affect?
They're just a lot more strict on sort of.
Yeah, it's harder to get planning than it is to get a license.
Okay. And this planning permission, how long does that process normally take?
Again, it varies, but I'd say
roughly average.
I've seen some places take about 6 months, 9 months.
Okay, but so with the planning permission, you can't rent it as a HMO while that's happening.
Because you can't change the property without.
You can't change the property. Okay.
And I genuinely have known instances where people have done extensions and a loft conversion without getting planning. Planning's been refused and they've had to undo it. So you don't want to be doing that.
Oh, so before you do anything, make sure you got planning permission, and then make the changes.
Yes.
And then apply for the license, and
that's why it takes long, right?
Okay.
But then what you could do is, like, when you're buying properties, you could.
But then is it worth it going through all that hassle?
Yes. for the larger ones, right?
Okay.
7 bedrooms and above, definitely.
Okay.
Even on some 6 bedrooms, if you can do a 6 bedroom, and it's just like, say, it's a stud wall thing. Yeah, I know I'm laughing about it. A 6 stud wall thing. That's basically a house. It's still the same value as a house because you could undo that and go back in. But let's say you did 6 bedrooms, all en suite. You found a way to change the floor plan, make it all en suite. Suddenly that becomes an investment because a family couldn't move in. And then what you find is some lenders, not all of them, will give you a valuation based on the income. So whereas the value as a house, like the house next door, might be worth 300,000.
Yeah.
Based on the income, that's worth 450. Then this is what people do when you get to 7, 8, or 9 bedrooms. If you're doing income-based valuations, that's like 500-600 grand.
Yeah,
and that's why it's worth it. It's an investment, not a residential.
So from what you said, it makes sense. If I was to think about doing a HMO, get something that's big enough to do.
I'd say 6 minimum.
6 minimum, yeah.
Because look,
then it makes it worth it.
Yeah, with a 4 bedroom, that's basically going to cover your mortgage.
Yeah,
basically. With the 5 bedrooms, you got a bit of profit. 6 is where you're really going to make a bit of money, and then you might get the investment as well.
Okay. So people that are considering to do a HMO with their existing properties, it's advised to get at least 6 bedrooms in there.
Yeah, and some bathrooms.
But if you're looking as an investment to get into the HMO game, 6 bedrooms or more to kind of make it worthwhile for yourself.
Yeah. Because look, if you're going to manage it yourself as well, you got 6 different tenants, 6 different headaches. You want to make the profit on the back end worth it.
And if you're gonna get an agency to deal with that headache for you,
they're gonna charge you a premium.
Yeah, they're gonna charge you a premium. That's gonna. Okay, another thing I was gonna say. how easy? Okay, before I apply for a HMO mortgage, I just need the planning permission and apply for the license.
License has to be applied for. Planning has to be in place.
Planning has to be in place. And then
License has to be
before I
applied
can apply for the license, do I have to get the go ahead from the planning permission?
Yeah, you have to have the right planning.
Again, that could take up to 9. Well,
Yes.
I want to say up to 9 months. It could take 9 months, 12 months.
But,
even.
and here's the timeline. So let's say, I don't know why I keep using this, but let's say you apply for planning. You buy this on a bridge
Okay.
because you're doing quite a lot of work. 6 months to get planning. Then it's going to take another 9 months to do the whole conversion because you're changing a 3-bedroom to a 7-bedroom.
Yeah.
Then you apply for the license, but you got like 12 months, 15 months nearly there to get planning and do it. It's a long time. It takes a while.
And then that's the only time you can apply for that HMO license. Mortgage, sorry.
Yeah. But again, most of the successful investors have HMOs in their strategy because from a cash flow perspective.
Okay. This is. I don't know about you guys, but this is getting me interested in like.
Oh, call me.
Well, if you are interested, where's Shaz?
Where is Shaz?
Where is Shaz? Okay. What's the longest term for a bridging loan? Because as you just said, if I was to get into this HMO game, it could easily take me a year and a half.
Yeah. Honestly, could easily do it. Yeah.
And now, if I've got a bridging loan for 12 months,
don't do that. Nah. So up to 24 months normally, but that's for like.
Is that the average?
No, that's the
months?
longest.
Oh, is that
that's for like large developments. If you're building, say, new builds on land or whatever. For the smaller conversions, so let's say you're going to add one room or you're going to just do a little extension, maybe 6 months, 9 months. I wouldn't go on a bridge for any less than 6 months, just because you don't want to go over on the bridge. Go 12 months just to be safe. Bridging is a very complex topic. We haven't got time to cover all of it. But with bridging, just a general rule of advice is, if you think the work's going to take 3 months, factor in 6. If you think the sale's going to take 3 months or refinance 3 months, factor in 6. So take 12 months at the minimum. When you repay the loan, you only pay interest for the time you've had it. So,
yeah, I remember when you first told me about bridging,
the previous lost conversations that we had.
Yeah, guys, if you didn't know, this is our second time sitting down. The first one
ended in Ekbars, yeah.
But we're here now.
Yeah.
Okay. If I was to have brought a property on a residential. And I decided to rent it out.
Okay.
I'd have to I'd have to change it to a BTL.
Not necessarily. So you can get something called permission to let from the current mortgage lender.
Okay.
That's normally if your circumstances have changed. So, for example, my job means I've got to, for 6 months or 12 months, got to be away, or my family situation changed, go back home. So I'm going to rent this property out.
Oh, you can do that.
You can do that. Nothing changes. They just give you a letter to say you got permission to rent it out.
See, this is why it's good to have a mortgage broker in your.
This guy.
This is why.
This guy.
Do you put out content like this on your?
Yeah, don't you follow me?
No, but you don't talk about stuff like this.
I do, but I don't do residential, do I? I talk more about the investment stuff. But yeah, no, you can get consent to let. But that is if if your circumstances have changed.
Yeah.
If you're like, I'm going to rent this out forever, then yeah, you might want to switch to a buy-to-let at some point.
Okay. And is it okay? So you know how there's a lot of myths out there regarding properties and stuff. What are the common ones that we need to debunk?
So I think I'm going to talk about obviously buy-to-let stuff. One is I need an income or 25k income. That isn't the case. We've covered off why.
Yeah, I like that one.
One is
interesting.
I have to own my own house to have a buy-to-let. You don't.
Does it help though?
Yes, it helps. You get more lenders available.
But you don't have to be a homeowner to get into the BTL.
No, but Abdul, think about it this way. Let's say you bought something on a bridge to renovate first, and that's your only property. That also helps because when you come to refinance it, you own that property.
Say that again.
So let's say you're first-time buyer, first-time landlord, living with parents or renting.
Yeah.
You have no other property.
Yeah.
You buy a property to renovate. So you're going to buy it extension, taps, whatever.
Yeah.
Either you buy it on a bridge with your cash or with an investor. And you're going to refinance that. When you come to refinance that, you're not a first-time buyer anymore because you own that one. Because you bought that property on a bridge or cash.
That's the first time I'm applying for a mortgage.
Doesn't matter. It's more about, do you own something?
That's sick.
Yeah, so
that's like a little
loophole, hack.
Isn't it?
Yeah.
So you can put yourself down as an existing homeowner.
Yep.
But because you're just refinancing.
You're refinancing. The whole thing is it's a remortgage now. It's not a purchase.
Yeah.
So you can do that. What are the myths? Yeah, I mean, look, one thing you said earlier, which I've had before recently, is do mortgage brokers get cheaper rates? I don't know where that's come from. Probably mortgage brokers doing bad sales jobs, isn't it?
I think it's just a normal assumption from a
To be fair, yeah. Why would you use a broker when I can? Yeah.
Are they getting some like, you know, special
Nah, we get
rates
it's exclusive, maybe early access to stuff, but
yeah.
that's very rare as well.
Okay.
It's more, you know what it is?
It's just, I think it's paying for you for your knowledge at that point. And
not
experience.
knowledge, speed, service, expertise, and the team. So, for example, Lloyds Bank.
Yeah.
If you went through a mortgage with them, they've got a call center. They're 9 to 5. If you go through a broker, they might work all hours. They might WhatsApp you. You know, like there's difference in service, expertise, relationships, experience, bridging loans. Anything weird like
what are things to be mindful of when working with a broker? Because I don't want to go through my experiences, but there's been some horror stories.
I think that it's first of all fees. Like I charge fees, nothing wrong with that. But when the broker charges too much, it's a red flag. In a sense of some brokers charge a percentage. So I charge a fixed fee, some charge a percentage, and to me that's like, are they saying that the work is harder based on the size of the loan? Like it's not, is it? It's the work is the work. That's not really a red flag, but that's something to be mindful of. What is the fee? Second thing to ask is the right question. So some people ask, like when they're interviewing their brokers, are you directly authorized? Do you have access to a lot of lenders? And that doesn't mean anything in sense of, let's say there's 150 lenders out there. I've got access to 150 lenders, but because I only work in the property investment space, I only use like 30 lenders. So what's more important is I'm doing buy-to-lets, I'm doing HMOs. Is that something you deal with regularly? That's more important rather than how many lenders.
Okay.
Yeah. Next thing is like, you know, do I deal with you through the whole process or do you have like a case manager? So I have a case manager. It's important someone knows that day one because if they might really like me.
So what does that mean, case manager? So if I'm dealing with you directly, I might be talking to your case handler. Yeah.
So if we've done a deal, you want to go ahead, I'll hand you over to my case manager. She'll go through the end. Nothing wrong with that, but you need to know that up front because you might really like me and you might not like the case manager. Yeah. So it's good to have that conversation up front.
Okay. So I might not directly speak to you throughout the whole sort of thing.
Absolutely.
What about if I wanted to?
That's fine. And that's fine. It's kind of addressing that up front.
Yeah. Okay. Being transparent.
Yeah. Next thing is like, you know, communication. So look, how often are you going to email me or can we talk on WhatsApp? Like I hate Zoom calls. Yeah. Listen,
I get like annoying customers. Like let's be
all the time. My WhatsApp, I'll show you WhatsApp messages now. I hate voice notes. Why do you leave voice notes on things that are really important?
I think it's just easy. Like,
it's selfish. That's what it is. Listen, a voice note.
So because then you have to listen to it
in a quiet place on speakerphone. A voice note is convenient for you to send it because you sent it, but it's not convenient for the listener. So but that's the kind of thing. So you could say, you could say to your broker, look, are you okay to be contacted on WhatsApp? Can we do a Zoom call? I hate Zoom calls, by the way.
Yeah.
Because then you got to have a shave, dress appropriately, and I ain't about that life.
Just keep it just on the phone calls or whatever.
But that kind of communication, how often are we going to communicate? How do you want to be talked to? That kind of thing. Those are the main things: fees, communication. Who are you actually going to be dealing with? And yeah, if someone says I only want to speak to you, that's fine. Like,
as a client, what can a client do in order for them to be good to work with?
Yes.
To make it easier for your mortgage broker to kind of get things as smooth as possible.
Good question.
And what are things that we should avoid as clients to do? Because there's probably things from your perspective.
Listen, I've been in this long enough now that I've got these pet hates. Yeah. So first thing is, any new client will have to fill in a form, right? Like a fact find about yourself.
Which makes sense. Yeah.
It's about 8 pages, but it's not. You don't have to fill in 8 pages. People see the 8 pages and be like,
and get scared.
Have I really got to do this? I'm going to guess your date of birth, like. But from the 8 pages, some of them are non-applicable. Some of them are if you're employed, self-employed. So, but once you fill that in once, and if we work together again, as long as nothing changes, you've done it once and it's done.
And it's done, yeah.
So be prepared to fill in some forms initially to get everything correct. Second thing is be very honest and transparent with your broker. So, for example, Abdul, if you had a bankrupt company 2 years ago, might be worth telling me that. It's going to come out at some point. Yeah. Doesn't mean you can't get a mortgage potentially.
It just makes you a bit more aware.
Yeah, and I can preempt it, or I can look at lenders who are okay with it. Same thing with credit in general. If you've got bad credit, just tell you.
That's another good point, actually. There's people with probably that's got, I don't know. Can you get a mortgage with the CCJ on your credit file?
Yeah, but it's not ideal. So, CCJ is quite extreme, man. Let's go back a bit.
No, but CCJ, this is a true story actually. I had a CCJ. Guess
Parking
what
ticket?
for? Parking
I told you
ticket.
this happens.
But I appealed it and it got.
Was
I
it a
got rid of
private
it.
one or was it council?
It was I think it was a private one.
Yeah, because
Imagine this. Apparently, I had a parking ticket
apparently
3 years ago.
yeah.
Probably longer actually. What year are we in? This was like a 2019 or something parking ticket, and I got a letter in the post, something saying, I can't remember exactly, but
So you got a letter and you ignored it, yeah?
Apparently, I must have. Like, I don't remember getting that letter, but
Yeah.
it happened, and it happened to loads of people around the same time. Anyway, long story short, I had a CCJ. I'm screwing. It was only a £60 fine or whatever it was. I'm thinking, I haven't kept my credit file nice for all these years just for me to get screwed by. Anyway, I appealed it. Luckily, the judge was like, look, and because they invited, it was a phone call one. And the judge was like, yo, listen, it's just because you don't want it on your credit file. I was like, yeah. I go, look, I paid the fine. It's not even about the fine. I go, I just can't have it on my credit file. He's like, yeah, don't worry about it. Scrap it.
If you pay it within 30 days, it doesn't come on your file. But
No, it was after the 30 days.
But if you
after
take
the
a step
whole
back, because
nonsense,
that's an extreme
Okay,
example. So credit file, with a buy-to-let mortgage, it is a bit more flexible. If you've got arrears or defaults or late payments, let's say on a phone bill or anything unsecured,
utility bill,
stuff like that, lenders can sometimes ignore because it's unsecured. As long as you pay it off, it's fine.
Okay.
If
As long
it's-
as it's not scary yet.
Yeah, but if it's secured, like another mortgage payment or a
Yeah.
PCB car payment, then that's an issue. If you've got CCJs, that is a problem.
Yeah.
Get them paid.
Yeah.
But you can get lending, but it's expensive. I personally, if I had a CCJ, it wouldn't be worth getting a mortgage because it's just too expensive compared to what it would be otherwise.
Is it a matter of that you'll get some stupid rates?
Yeah, like 10% or thereabouts.
Just stupid rates.
Yeah, it's not worth it. But keep on top of your credit file. But this is it. Tell your broker, if you know you've got an issue, tell your broker, because what you got to realize is your broker isn't going to tell a lender everything. You tell them everything, then they'll filter out the crap and tell the lender what they need to hear. Our job is to position and package you as this amazing investor.
As the best possible way. Applicant. Yeah.
But what is the problem is, let's say there is something in the background. There's a difference between me putting you to a lender and saying, by the way, Abdul's got this in the background, but this is what happened, versus a lender going, hang on, this has happened, tell us more about it. Like, if we preempt it, it means we're not hiding it, we're transparent, you know about it anyway. Other thing people get really funny about is proving their income. Simple as, like, if you're employed, you get pay slips. If you're self-employed, 2 years tax calculations from your accountant.
What about if you're like
Director of your own company, you pay yourself, you're still self-employed.
No, but if you're a director of your own company, that's
Still
not
self-employed because you're employed by yourself, and this comes up a lot. But yeah,
you're employee of your own business,
but you still need tax calculations.
Okay, so a pay slip at that point is not enough.
No,
even if you're a director of your own company,
because you're self-employed. So on your tax calculation, it'll funnel through all the income, pay for all employments, you profit from UK property.
I was told by
another broker.
No, not even a broker. This is just general. Like if you're a director of a limited company, you're not self-employed. Self-employed is someone like a plumber or
no. That's a self-employed, like sole trader. But if you're a limited company
trader,
director, you're still self-employed from a lending point of view.
From a lending perspective. Okay,
lending point of view.
Okay.
And the last one I'd say, which is very important, is proof and source of funds. So yeah, you got your 25% deposit.
Yeah.
Where's that money come from?
Okay.
So proof of funds is, I've got 3 months bank statements. It's there. Source of funds is, 9 months ago I had an insurance payout and that's what paid me. But lenders really, 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 really want to know where that money's come from.
That, aren't they?
Yeah, and it gets more complex and awkward when it's like, it's a gift from say your parent. Okay, where did they get money from? And they have to prove. The lender might not ask that question, but the solicitors definitely will.
Oh, would they?
Yeah, because their job is to sign it all off,
legal,
make sure they've done all the anti-money
That's
laundering
their job
checks.
at the end of the day, isn't it? Yeah.
So if you're dissy and you're in committee, and they're using that as a deposit, imagine proving that as a deposit source.
But committee is not illegal though, is it?
It's not legal, but
it's just hard to prove.
Because you got 10 people putting in like $5,000 each. Where they got their money from?
Okay, that makes sense. That's a whole different topic, and equity deposits, and gifted equity, and
committee.
I say, guys, hopefully this has been inspiring enough for you to kind of start the journey, or at least kind of set a nice foundation for you guys.
Get educated, do your research, and property.
If anyone
safe.
wants to reach out to you,
yes.
If they've got any more questions, what's the best place?
Instagram, Where's Shaz, double S in the middle, no question mark.
Cool. Guys, remember, if you've liked this episode, make sure you give it a like and subscribe to the channel. And up until then, we'll see you on the next one. Peace.
This episode was sponsored by Eddge Agency, your one-stop shop for all things creative, digital and marketing. Contact Abdul now in the comments.
I'm going to use that.